Wintel is a company that designs and develops wireless and satellite communication products. They mainly manufacture defense electronics and advanced radar systems, and they majorly cater to sectors like aerospace and defense. Now, the reason why the stock is in focus today is because, as you rightly mentioned, they have won a domestic order worth 460 crores from Zetwork Manufacturing. This order is mainly for satellite communication equipment and AMC support, and this order is expected to be completed within within the next 3 years. Regarding their stock performance, yes, the stock has rallied and is up more than 10% today, but in the last 6 months, they have fallen more than 25%, and on a year-to-date basis, the stock is down almost 15% as well.
Right. Avinash, any view on Aventel, big order wins coming in? How do you see that? How do you see this counter at the current valuations?
So I think, Swamit, longer term, this company should do well because even now, I think the kind of order book the company has enjoyed gives it a very strong revenue visibility over the next, say, 12 to 18 months. They were already a well-established defense vendor. And I think this order book is definitely going to fuel FY27 and 28 numbers. I think clearly the markets again would look at execution because these kind of orders are slightly, lopsided and growth does not come on a quarter-on-quarter basis. But nevertheless, margins should improve. And I think the company is also bidding in a lot of L1 orders, which I think also should materialize. So net, I think the medium to long-term prospects appear to be good. I think somebody who wants to buy it should buy it on declines. Today, the stock is up about by 10-11%. So maybe on a decline, this could be added.
Well, next stock which is in focus is Asgard Alcobev. You know, the stock is up almost 17% in the last 1 month. They are betting big when it comes to, breweries, and they've expanded brew play in Northeast as well. But to speak more about that, we are here joined by Jasmeet to help us with all the details.
Well, Varsha, thank you for that. As rightly said, the stock company is betting big on the alco business going ahead. A bit about the company. While this particular company has been rebranded from initially Banganga Paper Industries. So what exactly happened was the paper industries acquired 79% majority stakes in CMJ Breweries, and later company got renamed to Asgard Alcobev. And the company currently acts as a beer manufacturer, corner manufacturer for the major beer brands in India. If we look at the key clientele, it involves Henniken's, Kingsfishers, Carlsberg, and Mohan Menik are the key top clients for the particular company. If you look at the recent news, the company has been flooded with a lot of positive up moves in the recent times. If you look at the stock performance, stock is up nearly 17% in last 1 month, but over 6 months it remains flattish. Company recently appointed Ronak Jain as an MD of the company, who has experience of 15 years in the alco business and look forwards to have up moves in this industry as well, as it's a recently formed new entity. Now, in terms of the other recent news, we also see that the company subsidiary has signed a manufacturing deal with a company called as Golden Edge Beer, where they would manufacture beers for this particular company in 4 variants, and this particular contract will increase company span in northeastern region and increase their top line as well. If you look at the overall capacity, the company's installed brewery capacity stands at 7 lakh HL per annum as of the FY25, and this can be expanded up to 9 lakh HL as well going ahead. So we see expansion remains for the company a key crucial to grow ahead, but the company also has current capacity to increase the clientele and increase the capacity as well. While lastly, in the future plans, company plans to establish new brand, new collaborations going ahead and increase their stakes when it comes to the overall beer manufacturing.
Right. Thank you, Jasmeet, for all the details. Well, Avinash, what's your view when it comes to, Asgard Alcobev, considering the shift that the company is doing, and also your view on the brewery sector overall?
No, I think, Varsha, coming to the company, this is definitely going to be a very strong structural opportunity because, Banganga was earlier a craft paper manufacturer. Now, when they've entered the brewery sector, they have purchased the CMJ Breweries, which is one of the largest, breweries in Northeast India. As your colleague mentioned, they cater to the large vendors as a contract manufacturers like United Breweries, Carlsberg, as well as Mohan McKean. And I think, the current year is going to reflect partly the benefit of this reverse merger. We could see top line of close to about 200 crores and a PAT of around 10 crores. But the year FY27 is going to be a lot better. And plus, there is some scope for expansion even from the current facility. So my sense is the markets have not given it the real potential it deserves as of now. As the numbers come out and as execution takes place, I think you will see a bigger re-rating happening in the stock. So structurally, we have very positive here. I think even at the current level, a lot of good value can be materialized, provided investor has got a 12 to 15 month kind of time.
Right. Got that view. Well, thank you so much, Avinash, for joining us and having a conversation with us. Pleasure to have you. Thank you. Well, moving on, IRM Energy, let's see what that stock is doing. The stock is up almost 4% in trade today. One of the reasons is PNGRB have directed City Gas Distributor to provide connections to institutions within 5 days. And also recently, if you see, government have urged 60 lakh households after LPG supply concerns panic booking. About 1.5 crore domestic PNG consumers are getting assured supply. And if you see, government is suggesting commercial customers of LPG to, contact city gas distributor centers to get the natural gas through pipelines. What will be the impact of this? Of course, this could lead to faster adoption and increasing volume, but the net impact on financials are largely neutral, as domestic PNG is not high profit making segment. But switching to PNG from LPG also requires an additional cost as user front. Also, if these 60 lakh households shift to PNG next 1 month, and if gas availability issue continues, then city gas distributors might face gas shortage to domestic PNG. On the outlook and key monitors when it comes to IRM Energy, let's shift our focus to that. The volume growth guidance has been given at 12 to 15% next year, which has an upside from FS and NI. And the Q4 is expected to outperform with more station additions. And the sourcings, if you see, the FS industrial revival is contingent on PPCB enforcement, but the execution risk, if I were to talk about lastly, when it comes to IRM Energy, you have NT pipeline delays, which will be mitigated via LNG logistics plus new tap-off. So overall, because of PNGRB directing city gas distributors to provide connections to institution within 5 days is one of the reasons why IRM Energy is buzzing. But guys, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
You're watching the afternoon edition of Ask Profit. I'm Mahima Vajrajani. But before we start taking all your stock-related queries, a very quick update that is coming in from Lok Sabha, which is past the Finance Bill 2026. And let's get in Shrimi to give us a perspective on what the key amendments are. Shrimi, over to you.
Of course, important day as Finance Minister moved the bill, and it has been passed a little while ago. And we've been reporting and breaking the story on the key amendments which was moved along with the Finance Bill. And I want to highlight that because this is going to be very important from the direct tax perspective. To start with, what this bill, which now will convert it into Act, saying that going back to the retrospective changes to nullify select court rulings, so which means that tax officers will have administrative powers now to go back to the cases and reassess and reopen the matters which they deem fit and have proper evidence about that, irrespective of the fact if there is a court ruling against that particular case. So that's a very, very huge development and key amendments which was brought it, and it will be now the part of the Act. The second one important is that SSEs, which is the taxpayers, will be given 30 days time to respond on the reassessment notices, which you can expect after this new amendment, because that may open a lot of cases, and taxpayers may receive notices on the the old matters as well. Again, if the tax department feels that it will, got diluted on the technical ground, so clearly given the administrative power there, and taxpayers actually respond on, within 1 month, and that could go up to 3 months. So that kind of rebate has been given to taxpayers as well. I want to highlight a couple of facts, here as well. The court ruling and the jurisdictions which is there, they try to fast track that. In fact, they say that all sort of procedural lapses in approval should not be impacting the validity of the proceeding. Now, this is also very, very important. In fact, no arrest will be made for non-payment of tax dues. This is a positive news for taxpayers, of course, because they are reducing the litigation, they are moving towards the decriminalization, and then no interest on the penalty as well on the misreporting in the tax return, which they are going to file and start from FY26. 2027. So this is the main key highlights of the amendment. And of course, the finance minister during the speech talked about a roundup of the entire budget proposal, which she proposed during the February. And now the bill has been passed with these key amendments. Remember, 32 substantial amendment has been moved along with the finance bill. Back to you.
Right. Shimi, thank you so much for getting us those details with regards to the key amendments of this finance bill, which the Lok Sabha has now passed. Now, that's, of course, something that you need to keep in mind as well. But let's start taking your queries. But before we do that, let's take a quick look as to how the markets are doing, because trading very well in the green today. The Nifty is almost at its day's high point, slightly off from that day high point, well above the 540 odd points. 23,450 is what we are seeing on the Nifty charts. 2.4% of an uptick for the Bank Nifty also. The same thing is following, up 2.7% as well. Quickly, let's try to pull up the Nifty 50 heat map to see as to what is actually leading to that gain. You have Shriram Finance topping that chart, up 6.7%. Trent, Titan, Adani Enterprises, Grasim, Bajaj Finance, and the list goes on, because just 2 stocks out of those 50 stocks right now are trading in red, that is Power Grid as well as Tech Mahindra right now. But let's try to pull up the sectoral heat map and then the broader end of spectrum as well. Even in terms of where the sectors go, all sectors right now are trading in the green. And you have PSU banks up trading 3% higher. You have consumer durables, which is also up 4%. Nifty Auto also seeing some relief, up 2.8%. Metals also seeing uptick of around 3% odd. And we've seen this because gold and silver has also rallied in trade today. Let's try to put up the advanced decline ratio, because the broader end of spectrum is equally showing strength. The ratio in terms of where the advanced decline grows has held steady throughout the day. You have around 2,244 advances versus that of 269 declines, so almost 10 times is what we are seeing. Let's try to pull up the mid-cap 150 and the small-cap 250. The mid-cap 150 is up 2.9%, almost nearing the 3% mark at its day's high point, and the small-cap 250 also at its day's high point, up 3%. But with that, let me also welcome in our guest for the day, Vishnukant Upadhyay, AVP Research and Advisory at Master Capital Services, joining us now, and Shahina Mukaddam, an independent market expert, joining us now. Welcome to both of you, and thank you so much for taking out the time. I'll start by taking the first query, which is from Rakesh, who's writing us from Hyderabad, asking about JB Chemical from a short-term perspective. In terms of where this counter is concerned, Shahina, what's the view?
Well, JB Chem is actually a stock that you can hold for the medium to longer term. But in the immediate, I think in terms of numbers, there could be some impact of higher raw material prices. So I would say hold, but let it consolidate before you add on to any further position.
Okay, so that's the view coming in on JB Chemical. The next one that we have is from Kesha, who's writing us from Chennai. By the way, viewers who are tuning in, you can also give us a call on the number that was flashing on your screen up there, and also send your queries on the WhatsApp. But the next one is coming in from Kesha, who's writing us from Chennai, asking about Hindustan Copper. From a long-term perspective of 2 years, wants to know as to what should be the course of action for this particular counter. Shahina, I'll stick with you for this one. Hindustan Copper, it's corrected quite a bit after the momentum it saw, but do you think from a 2-year perspective it's a good hold?
Yes, definitely. You know, it holds 40% market share in the domestic copper production, and copper prices, which had corrected, if we saw in the last couple of months, has again bounced back. So I would say it's a good hold, and you could hold it for a 2-year period, definitely.
Okay, the next one is coming from Ramesh, who's writing us from Bengaluru, asking about Jio Finance. He's bought 38 shares at the levels of 259, sitting on a loss of around 760 odd rupees, 750 odd rupees. Wants to know if he can hold or sell or maybe average at the current levels. Vishnu, a very good afternoon to you. What are the charts indicating for Jio Finance?
Hi, Mahima. A very good afternoon. Well, so Jio Finance is currently trading through the cluster of its all key moving averages. But yes, the recent rebound clearly indicating that the prices seems to have formed a short-term bottom. So one can take a chance from the present juncture. Prices are now all set to extend this gain towards 255. Maintain stop loss below 225.
All right, so that's the view coming in on Jio Finance. The next one is on EPAC Prefab. Our viewer Saurav Sagar has bought 338 shares at a price of 260. Wants to know whether he can hold or exit. Vishnu, enough data on the charts to give a perspective on EPAC Prefab?
It's a EPAC durable. Achha, okay, 1 second.
EPAC Prefab. The stock is currently trading at 151. It's up 4% as we speak and at its day's high point.
Well, so yes, stock has rebounded sharply in today's trading session. It is trading with a gain of around 4.5%. Well, so yes, this short-term rally can extend this gain towards 159. But yes, for a longer time frame, stock is still trading with a bearish trajectory. So for a long term, no. But for short term, price can extend towards 158.
Okay, so that's the view on EPAC prefab. Moving on to the next one, which is coming in from Thomas, Professor Thomas, in fact, and he's writing us from Cochin, asking about Gabriel India. He says he's bought this counter at the levels of 415. What should he do next is what he's asking. He's not given his time period. It's Gabriel India. Shahina, any view on this counter?
I think I'll pass this.
Oh, sure. No worries. Vishnu, if you can try to pull up the charts for Gabriel India and give us some perspective on the charts.
Well, so in today's trading session, prices, attempted to surpass its 21-day exponential moving average. But yes, stock is still trading below its 200-day exponential moving average. But the way prices behaving in last, for last couple of days, I'm expecting there could be some gain in the prices, and that gain should be containing around 930 sort of levels. But for a long term, still stock is in a bearish trajectory. For short term, that can extend towards 930.
Okay, so that's the view on Gabriel India. The next one is coming in on IRCTC. Aditya is asking this question. He says that he's sitting on a loss of around 23%. He's bought 30 shares at the levels of 688 from a long-term perspective. Wants to know if he can average or hold this counter. Shaina, a lot of divided views on this one, right? Of course, this is one monopoly play. There's no other counter which is like IRCTC, at least listed in the listed space and otherwise as well. But considering that it's taken a quite bit of a knock, what would you recommend?
Yeah, it has, because the numbers have not been up to the expectations in the last year. But I would believe going forward in terms of incremental business, ticketing business, they could do better. And so I would believe that at current levels, it's a hold. And you could hold it and review it maybe after a couple of months to see if the operational performance has improved.
Okay, so that's the view coming in on IRCTC. Moving on to the next one, we've got Ram Rao, who's writing us from Pune, asking about Tata Elxsi. He's bought 450 shares at the levels of 16 rupees. Is that correct? Okay. His buying price might be something else, it seems, but I'm not sure if Tata Elxsi ever went to that 16 rupees mark. Wants to know as to from a long-term perspective, can he continue to hold this counter or not? Shahina, any view on Tata Elxsi?
Well, see, actually, after that huge correction, he must have bought it, but decades back at those levels. But after this huge correction that we saw over the last 2 years, I think, in terms of the opportunity for R&D companies which are, working a lot on the EV segment of the business, auto, I think there is a lot of potential going forward. And valuations also have started looking a bit more attractive. They were very expensive if you saw it a year back. So now I think it is a stock that you could hold and consolidate. It's not something that's going to really shoot up immediately over the next 1 year. But I would believe if you're a 3-year or 5-year investor, it's a good stock to hold.
Okay, so that's the view on Tata Elxsi. We've got our first caller for the day. Arvind is calling us from Bareilly. Arvind, a very good afternoon to you. What's your query about?
गुड आफ्टरनून मैम, मेरा क्वेरी है, मैं रियल एस्टेट की कंपनी है अरविंद स्मार्ट स्पेस, उसको अपने पोर्टफोलियो में ऐड करना चाह रहा हूँ, पर इस रियल एस्टेट में मैं बुलिश नहीं हूँ, पर मैं अपने पोर्टफोलियो में एक रियल एस्टेट का स्टॉक रखना चाहता हूँ मैं, इसलिए मैं टेक्निकली लेवल पे पूछना चाहता हूँ कि बाकी मैंने चेक किया तो मुझे फंडामेंटली स्ट्रॉन्ग तो लगती है, पर टेक्निकल लेवल पे मैं पूछना चाहता हूँ कैसी कंपनी है ये।
ठीक है, तो अरविंद जी आप जानना चाहते हो कि अभी एंटर करना चाहिए कि नहीं इसमें बेसिकली?
हाँ,
समझ गए। ओके, आई टेक दिस अप विद विष्णु देन। विष्णु, अरविंद स्मार्ट स्पेसेस के चार्ट के हिसाब से आपको लगता है कि अभी करेक्ट समय है उसमें एंटर करने के लिए?
So shall I? Okay. Yeah, well. Okay, Mahima, so basically prices are forming a sort of bottom at a current prices at a current market rate somewhere around 502. So that could be a golden opportunity to get enter in this stock for the target of somewhere around 580, the proximity of 200 exponential moving average. But one thing I would like to highlight here is that the prices are forming a very crucial support here. So if prices falls below 480 sort of levels, then get exit from the market.
Okay, okay. So that's the view coming in on Arvind Smart Spaces. Interesting that Arvind was to go ahead and buy Arvind Smart Spaces. But moving on to the next question, Kiran from Bengaluru is planning to buy Biocon. Wants to know from a current price perspective, from a long-term perspective, is this the right time to make an entry? Shaina, would you recommend that?
Yeah, I would recommend you can buy it. You can probably buy it over like the next 2-3 months, one third, one third, one third. But I believe while this year is going to be a year of little bit of consolidation because of the debt being, repaid, and it will take a year, maybe a couple of months to finally get rid of that issue. But I think the future going forward it is bright. You have peptides, which is likely to do pretty well for them. You have other, the domestic generic also is doing well. So I would say buy Biocon, and you can keep a target of at least 70 rupees, 70, 80 rupees higher from current levels.
Okay, so that's the perspective on Biocon. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, very good afternoon to you. I believe you have a question on MTAR Tech.
Yeah, I just want to know if I buy MTAR for long-term perspective for 1 year horizon. It is the right time to buy now.
Okay, got it. China, your view on MTAR Tech?
Yeah, it is a very good stock to buy for the long term. Valuations are a bit expensive, but even current levels, if you buy, you can buy it and then hold it with a target close to, I would say you can see 4,500 type of levels if you're holding it for a slightly longer 2-year period. So yeah, you can buy it.
Next one, Pramod from Bengaluru wants an overall view on L&T, whether this is the right time to enter. Vishnu, with regards to L&T, we've seen the stock tanking and how because of the war situation, as they have a big exposure when it comes to the Middle East. It's 37% of their international book, right? But the management did come out and clarify and said that 95% of those sites are operationally working and there's business as usual. But despite that, the stock has not picked up the momentum the way it should have, right? Because it's fallen quite a bit. With regards to where charts goes, what is the kind of support and resistance that you're seeing?
Well, so after falling around 25% from its 52-week high, prices are now getting traction and rebounded sharply from its lower levels. I believe, while on a chart, prices are still trading below its short-term and long-term moving averages, that is 21 and 200 exponential moving average. So for a conviction, prices need to surpass 3,800 sort of levels to bring bulls back into the field. But I believe this could be a right levels to get enter in the market for a long term. So one can buy the counter at a current market rate, keep the stop loss below 3,400, and targets will be somewhere around 4,050.
Okay, all right. So that's the view on L&T. We've got our next caller, Chetan, is calling us. Chetan, a very good afternoon to you. What's your query about?
Good afternoon, ma'am. I have bought Delta Corp long back, around 310 rupees, 150 shares. So I am in huge loss. So I just wanted to know whether I can hold it or I can exit from it.
Got your question, Chetan, and I understand as to what your concern is about. Shaina, your view on Delta Corp. So because there are looming concerns for this particular counter, and also together there is regulation also which will continue to have an overhang on this one. What's the view like? Should he book his losses?
Well, yeah, it's become a very small cap stock now. It's turned around. It made some bit of profits in December, but I think the overhang of government policy and additional taxes, GST, etc. I am not sure if it is fully cleared out. I would say you can hold it for now, but you will need to track it very closely, because you will need to see whether they come out again with profits or what is the impact of all these changes and losses. You hold it for now. You keep a stop loss of something like a 50 rupees. And then you could try to see if you need to change it in the shorter term, or if you're looking for a longer term, maybe hold it till it's about 47 rupees. And if it even goes below that, then you need to exit.
Okay, so that's the view on Delta Corp. The next one is coming in from Alok, who's writing us from Delhi, asking about Suzlon Energy. Wants to know the outlook on this particular counter. Vishnu, your view on the charts for this one?
Oh, 1 second.
The stock is currently trading at 42 and up 4% in trade today.
Well. So stock, just regain it's a short-term moving average, that is a 21-day exponential moving average. I believe that's the right time to get under technically from the technical standpoints. And on the higher side, I'm expecting prices to extend this winning streak, recently emerged winning streak, towards a 45, 46 sort of levels. So on the lower side, put a stop loss below 40.80 and buy the stock for the target of 45, 46.
Okay, all right. So that's the view coming in on Suzlon. The next one that we have is coming in from Sundaresh, who's writing us from Bengaluru, asking about Wipro. He's got 30 odd shares at the levels of 188. Wants to know whether he can continue to hold this from a long-term perspective. Shaina, your view on Wipro?
Well, I don't think Wipro is the best stock to hold in the IT segment, which though it is looking up the overall sentiment for the segment, I would think it's better to be in something like if you're looking at a smaller company, Emphasis, where I believe there is a good traction going forward, both in terms of stock price as well as in terms of business. Promoter group has also become strong. Or if you're looking at a larger, maybe Infosys would be something like you could look at even HCL Tech. So I think you have better options available than Wipro as of now.
Okay, so that's the view coming in on Wipro. But time for our rapid fire round. Vishnu as well as Shaina, try to keep your answers as short as possible to buy, sell and hold. I'll try to throw as many questions as possible. The first one is coming in from Shresh, who's writing us from Noida, asking about Good Luck India. He's got 700 odd shares at the levels of 1200 per share. Your view on the charts, Vishnu?
Once again, there is some so you can buy the stock for the short term for the target of 1050. Maintain a stop loss below 988.
Okay, Bajaj Auto bought at the levels of if I'm not wrong 11,320 and wants to know, our viewer Kirti wants to know if she can continue to hold this from a long term perspective. Shaina, she's sitting on a loss, but is it a good hold?
No, it's a hold, and also if it dips further, then you could average out further.
Okay, Dixon bought at the levels of 12,000 for 1 year. Jay Krishnan wants to know if you can continue to hold. Shaina, your view?
I would say you can sell half as of now and then average if it goes lower. Otherwise, it's a hold if you're a really long-term investor.
Okay, Spandana Spurti is the next one. Natraj wants a view on this particular counter. His buying price is at 257. Vishnu, your view on the charts?
Clearly avoid as long as prices are trading below 223. So I would prefer to avoid the counter.
Okay, the next one is coming in from Chennai. James is writing this particular query and wants to know one buy at this moment where charts are looking attractive. Vishnu, your view?
That will be Indian Bank from the PSP basket.
Okay.
And
sure.
I believe stock should reapproach its recently found bottom. That is top. That is a 997 around levels.
Okay, IDFC First Bank. Shaina, do you think this is a good time to buy?
I would say no, it's a hold. It will consolidate for some time.
Okay, Hindustan Zinc bought 100 shares at the levels of 321. Our viewer wants to know if you can continue to hold or not. Vishnu, your view on the charts for Hindustan Zinc?
Let the prices cross above 532. From technical standpoints, it's looking weak for a short term.
Okay, the next one is on HDB Financial Services. Balamurugan from Chennai wants to know if you can continue to hold this from a long-term perspective. Shaina, your view?
Yeah, from a long-term perspective, it looks good. He can hold. Short-term looks a bit weak, but long-term is good.
Okay, Anant Raj bought 50 shares at the levels of 558. Is this a good time to maybe accumulate more, continue to hold, exit? Vishnu, your view on the charts?
Well, the prices are trading below its moving average. Let the prices move over 480 for the fresh buying, and the target will be around 540.
Granules Limited is the next one. Raghuraman is holding 25 shares at the levels of 294. A fundamental view on this one and maybe average out at the current levels, Shaina?
Yeah, he can average.
Okay, Tata Tech
it's a hold.
Okay, Tata Tech is the next one. Sridhar Murthy from Bengaluru is holding 3,000 shares. He's not given us the buying price. Hold or exit on the charts, Vishnu?
No, currently it is in bearish trend, so I would prefer to stay away from the counter.
All right, so that brings us to the end of this rapid fire round. Vishnu as well as Shaina, thank you so much for helping us answer all those stock related queries. Viewers, today the morning edition and the afternoon edition combined, we've managed to answer around 130 odd queries. So thank you so much for showing your enthusiasm in asking, and it was our pleasure answering those queries as well. With that, completely out of time on this edition of Ask Profit. Do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand.
Hi, thanks so much for joining in. It is a pretty picture at the start of the closing session today. That is Hiral Dadia. My name is Alex Matthew. I got that introduction completely all over the place. But the one thing that is not all over the place is the equity markets. Up about 1.8%, Hiral, not at the high point. We've lost about 130 points or thereabouts from the high point, and that was the really pretty picture. If you put yesterday's gains and today's gains together, we've made some ground back, right?
Yeah, we've made some ground back, and you know what I'm happy about, I would say, in simple language, is the advanced decline ratio, which has been healthy over the last two sessions, right? And that is giving some bit of confidence as well when investors are concerned. You're talking about what, 2,200 advances versus a 300 decline, and this trend has remained pretty constant for the last 2 days as well. So that is an interesting picture. And if you see in terms of broader markets, that outperformance versus the benchmarks has continued. In fact, Alex, it'll be interesting to see what the heat map tells us in terms of individual stocks.
Let's do just
sectors.
that. Let's do just that. Pull up the heat map for the Nifty 50 and there'll be a mostly green screen. In fact, just 3 stocks now in the red, and those are your tech companies which are flirting. Infi, for example, is flirting with green at this moment, off the low point of the day. TCS as well as Tech Mahindra. Power Grid sees more money getting taken off the table, but what is working is Shriram Finance. Remember, it is one of the stocks that has been significantly volatile in the recent past. If you were to identify one of the Nifty 50 stocks with high beta, well, this is one of them. This is certainly probably the top in that category. 6% up. Titan making a little bit of ground back after it lost ground when the gold prices came off quite dramatically. It's up about 4.2% or so. Bajaj Finance, Ultratech, Trent, Adani Enterprises. It's broad-based, Hiral, at this stage.
Yeah, broad-based, but if you have to look at the top 10 or 15 companies as well, gains are upwards of 3%, which is really encouraging on Nifty 50, right? If you have to look at a Reliance Industries, which is a heavyweight, HDFC Bank 2.6% on a HDFC Bank, SBI around a 3% up move. Reliance Industries, again, it's just 0.5%, very similar to what it was yesterday. So one of the heavyweights which is not contributing is, without that as well, you're seeing these kind of gains, which is good. Let's just look at the sectoral heat map and see what that is looking like. I'm sure it's going to be a very pretty picture because it was only IT which was in the red, but that itself is in the positive right now. Consumer durables, the PSU Bank Index, metals, real estate, all of them have been on the positive end. It's only IT which is still seeing marginal gains of around 0.3%, but still trading in the positive. So the breadth in terms of the sectors is also looking pretty good in trade.
18-19 indices trading with gains of over 2%, which is quite considerable. I also want to look at the contribution picture for the Nifty 50 because HDFC Bank will be up there. It continues to be up there. Larsen & Toubro with gains of over 3%. State Bank of India leading the PSU banking index forward, and Axis Bank from the private sector index as well. Private bank index all doing particularly well.
Mainly it's your financials which are powering the Nifty 50 in terms of contributors. If you see HDFC, SBI, Axis. Let's just look at the NSE 500 contributors as well and see the kind of gains and losses that are coming in over there. See the range, Alex. 7.5 to 18% is the kind of gains that you're seeing on BSE 500 from Affle, Sterlite, Spark, PCBL. Losers, it's a range again from 2 to the maximum losses coming in on an Ether at 6.5, which was a gainer yesterday. So again, it's a profit booking candidate right now. Likewise with all your alkaline companies as well.
Yeah, and these are just 8 out of 350 declines, right? So few and far between. But what are the factors heading into the midweek market holiday, Hiral?
What is going to be interesting is because it's expiry, that last hour of trade is going to be very interesting. But second consecutive session of gains is what we're seeing in terms of markets, as Alex was also mentioning. And we've gained almost over 500 points on intraday basis. So this is something which is encouraging. And the support level and the resistance level, if you have to go to see, 23,450 to 23,500 is where the resistance is coming at. And that's the reason why you've seen that kind of reversal that has come through in terms of markets. Support coming in at levels of 23,300 and 23,200 on the downside. In terms of sectors, the PSU Bank is a top sectoral gainer as well because all the components over there are trading in the green. And despite the up move for a second day, your VIX is down just 1%. So that is something that we have to really keep our eyes on. Around 7 to 8 stocks are trading in the red at the moment if you have to look at the F&O components. And your broader markets are outperforming much more. Small cap 100, 3.2% on intraday basis. Small cap 100 seeing the biggest move since the 3rd of February 2026. Very lastly, if you see from 2 p.m. what has happened as well, clearly your cash market turnover as compared to yesterday is down 2%. Your F&O market turnover today is down 10%. Yesterday it was the reverse. Yesterday, it was only the cash market volumes with turnover which was down, and your F&O market volumes were actually higher. And this is what has changed in today's session because of expiry. What this would actually mean for the markets, let's quickly head across to Vinay Rajani, Senior Technical and Derivative Analyst at HDFC Securities, and we have Chakri Lokpriya also joining in. Vinay, welcome to the show, and Chakri also welcome to you. My first question coming to you, Vinay, is, we were just looking at the turnover. The cash turnover has slipped today. It was a similar situation yesterday as well. In terms of the F&O turnover, yesterday, which was at an uptrend, has seen a decline of around 10% since 2 o'clock today. What is that telling you with regards to where the breadth of the market goes? and the trend line that you would pick up on Nifty.
Yeah, so good afternoon. So definitely the yesterday was the first session of the recovery. We saw that significant sell-off was there on the Monday, but Tuesday's recovery started. And first recovery starts from the FIS short covering, and that's why the majority of the large cap stocks participated. So that must be the reason behind the higher turnover in the FNO segment rather than the flat volume in the cash segment. Today there is a broad-based participation, and some cash stocks are performing really very well. Technically, we are getting breakouts and follow-ups. Buyings are also coming, and we are able to book the trading calls as well, which was given yesterday. So alpha can be generated in the cash segment after a long time. So mid cap, small cap participation is there in today's session. Then today's volume in the cash market could be higher than yesterday, because yesterday there was a higher volume in the FNO segment because of the short covering and FI activities. So that may be the reason. And regarding the trend, yes, Nifty has recovered almost 1,000 points from the recent swing low. So the development has been positive. Some breadth indicator was clearly showing some oversold scenario 2 days back. Now they are showing some mean reversion, and we think that this pullback is here to stay at least till 23,900 to 24,000. That is the next target we are aiming in the Nifty. And as far as support is concerned, I think 23,000 to 23,100 has become a floor for the market, and that will act as a stop loss for the long traders. So we are right now expecting pullback extension in the market, and the next target for the Nifty could be 23,900 to 24,000. And at the same time, we are asking our traders to keep a stop loss at 23,100 in the Nifty spot.
Got it. So fair point. All right. So Vinay, before I go to Chakri, let me come to you on individual stocks. And good afternoon to the both of you. It's a good time to be talking to the both of you because there's so much green on the screen. Vinay, what would you buy on an individual basis though?
Yeah, so individual basis, I can see some strength coming to the railway stocks. So railway stocks have been underperforming, and more than 60% correction in the mid-cap railway stocks like Ircon from the all-time high we have seen. After getting oversold, they are showing some pullback signs from here. So there is a positive divergence in index also. So I think railway stocks can do well. And out of these railway stocks, Ircon International to us looks quite strong and exiting the oversold zone. So around 124, 125. One can go long, 120 should be stop loss, and we can expect 10 to 12 rupees upside for the short term. So Ircon is the one space in which we are bullish, specifically in the railway space. Thus another sector which we are bullish from here is the sugar stock. So there has been significant rise in the US sugar as a commodity. We can see the chart, and along with the other commodities, now sugar is also participating on the bullish side, and same can be seen in the Indian sugar stocks also. So today there has been a breakout in Triveni Engineering, then Dalmia Sugar. These are the stocks which look good to us. Especially we have already recommended Dalmia Sugar to our clients there as a trading call, which is trading around 329. So as a trader, one can go long in this Dalmia Sugar around 329. Stop loss can be kept at 320. On the upside, we can expect a short-term target at 355. So on sugar space, we are bullish, and railway stocks are, because they are oversold, they can show some meaningful pullback from here.
Got it. All right. Chakri, coming to you on the financial stocks, and this is a pretty broad question, but feel free to narrow it down further. What we're seeing right now is a bounce in the Bank Nifty, as well as in the PSU banks, State Bank of India as well, leading from the front. Is this a good opportunity to get it? Because a lot of people were worrying what the downside from the levels that we saw on Monday were, but we've seen a smart bounce back. On the fundamentals, would you say that this is a good idea to jump into financials now?
I think fundamentally the answer lies in the fact, where oil goes from here. So with oil prices coming down, the strain on the yields, bond yields is coming down. And that is, had caused the sell-off in the banks and NBFCs, which now the reversal is happening as oil prices cool off. The pressure on yields go off, and therefore some of the strain on the PSU banks as well as NBFCs comes down. And in addition to that, the revival of economic activity, which was dampened on the expectation that the war would prolong and therefore bring down economic activity and therefore loan growth for banks, that's also reversing. So the short answer is yes, we would buy both PSU banks as well as NBFCs, including private.
Okay, so that's with regards to the PSU banking space and the financials that we're talking about. But moving on, one stock which has been seeing a good rise in trade today on the back of a brokerage note is Sagility. And that is why we've picked that up as a stock of the day. As to what are the other findings that our own research analyst, Jasmeet, can get for us. That stock is at the day's highest levels, nearly with gains of 7.5% coming in there. Jasmeet, a good report that's come in on a Sagility. What are your key findings from the report, and apart from that, from the work that you've put together in terms of why this deserves to be a stock of the day?
Well, right, Hiral, thank you for that. If you look at the overall counter, this counter has done fairly well when you compare with the large caps and mid caps over the last 1 year. Well, when you look at TCS and Infosys is down about 25-30% over last 1 year. When you look at Sagility is down about 7% maintaining that up move and gains. Even the Q3 saw a good up move for the company. While today the stock is buzzing in trade on the back of the Nomura's note, where they initiate buy on this particular counter, target price is 55 odd rupees, and the stock is about 7.5% in today's trade. If we look at the overall note, they see the dual proposition, where they see value and growth both helping well for the company going ahead. While they also make a note stating that the vertically integrated healthcare tech player is placed well when it comes to the overall up moves going ahead. While in terms of the overall outsourcing and AI efficiency, they feel that's the two aspects that will fuel the company's growth in terms of the overall momentum in Q4 and FY27. The one is the AI, what the company is working towards, and the second one would be towards the overall momentum in the US healthcare space. Now, in terms of the other key aspect, the vertical integration and operational flexibility of the company will help company deliver superior guidelines and growth going ahead. While they also make a note that medical cuts, the medical aid cuts and MLR cuts in the US is pressuring margins of the clients of the Sagility, which in turn will help them to outsource a lot of their work to the players. Now, Sagility being the key player where the insurance company of US outsource their work becomes a big beneficiary for overall medical aid cuts in the US. That's why the stock remains in focus, and that's the reason why the company initiates buy on this particular counter. While in terms of other key players, the company expects 70 to 80% of AI efficiency that the company will gain because of the overall AI play to be passed on to the clients, and that's why the margins are expected to stay stable in the medium term if we look at the current levels of 25%. If we look at the Q3 did see a strong growth broad-based where the revenue grew by 19% and the inorganic growth was a major one which contributed 10% to the overall growth. While we also make a note that the margin have expanded by 110 basis points in the Q3 where we did see a muted to slight growth in other IT players, Sagility had up move 110 basis points in terms of the margins. While in terms of the overall ANR ratios, what the analysts are saying, this particular counter has all buy on this particular play where they have 10 buy ratings, and the return potential for next 1 year stands at 60-odd%. So all in all, we see good up moves coming in particular counter. The counter is currently at 34 times the price to earnings ratio, with something to watch out. It's slightly expensive going to other odd players in the market.
Okay, thank you so much, Jasmeet, for that. It's interesting to see what's happening with one of the AI plays as well. Chakri, let me come to you on this one. I mean, you're talking about Sagility, which is a smaller company as compared to all the giants in this space. How do you see this AI play, like, probably bearing fruits for a company like Sagility, and simultaneously, if you have to look at the other, mid-cap and small-cap IT players?
Sagility is a company which is clearly focused on the healthcare industry, within that the US healthcare industry, the outsourcing of the IT bit of it. And AI is something which is penetrating quite fast in the US healthcare industry. So if this company will clearly lose some amount of revenue because of AI in its traditional business, but that will hopefully be replaced with some of the AI related work they will do for the US the healthcare providers. So net, I think because of that, the company is likely to do well. But the only thing to keep in mind, it's a fairly expensive stock.
Okay, so Sagility, a fairly expensive stock that you are watching out for. Vinay, anything on the charts that you like? Because the run-up is quite steep in today's session. Would you still see some buying momentum on this counter?
It seems more like a pullback after a long time. The primary trend is still bearish because the stock is placed below its 50 and 200 days EMA. So medium to long term trend is still bearish. There is a recovery today, 8% up with the jump in volumes. There are resistances between 43 to 45. If those are taken out easily, then we can say that the trend reversed. But otherwise, it's just a pullback. It seems like that. So at higher level, it might get supply, and again the profit booking could still kick in. So 45 is the level one should watch out as a resistance. If that is taken out, then we can review the position and review the our view. But as of now, it is overall into a downtrend and short-term uptrend is there.
Okay, so that's with regards to where agility goes. But moving on, you have UBS, which has just come out with their India strategy note, and they've downgraded Indian equities to a neutral. It's a very interesting note that I'm picking up right now, because this is the third or the fourth brokerage house which has actually gone ahead and reduced their target price as well in terms of Nifty 50 when you talk about December 2026 targets. I'm not sure what UBS has done on Nifty 50, but at least a downgrade coming in on the equity side. They're seeing rising geopolitical risks and sustained energy price pressures, and they are highlighting the increased vulnerability and near-term pressures as well. What they've said is that the Indian equities are highly sensitive to oil prices, and hence the reason why they've downgraded. And the economy's heavy reliance when it comes to imported oil, LNG and LPG makes it really vulnerable to to supply disruptions and price spikes, with the Strait of Hormuz a critical checkpoint. Now, the persistent high energy costs will weigh in on growth, external accounts and earnings. They though remain constructive on India's medium-term growth story, but they believe that the near-term risk-reward has become more balanced at current levels. And the rise in oil prices in 2022 actually slowed the corporate earnings growth in India to single digits in FY23. And if elevated energy prices persist, FY27 earnings are likely to be adversely affected. That's what we're staring at right now, from a future perspective. But what happens from here on is anyone's guess, but a downgrade coming in from a UBS when you talk about Indian equity markets. And it's that time of the day where we get Somit Sarkar to join in with all the chatter from the dealing room. Somit, what have you got for us today? Because interesting day of trade. In fact, last 2 days have been very interesting. I'm sure you've got good chatter that you've picked up so far.
Yes, a lot of stocks that are buzzing in trade. Good chatter across the dealing room, because it's the second consecutive day where we have seen intraday gains of more than 500 points in trade. A couple of stocks, firstly on pharma side, Granules India and Shilpa Medicare. There are buy flows on the large HNI desk. Dealers indicate that inspection for one of the key units for Granules, that is Gagillapur, is expected to happen very soon. And do remember that the plant had earlier received a warning letter. So if it gets a positive outcome, definitely it will be positive for Granules India, but this will also be positive for Shilpa Medicare, because there is one key drug for which Shilpa Medicare makes the API, and Granules makes the does the formulation in the Gagillapur plant. So a clearance for this unit will definitely be positive for Shilpa Medicare as well, as per dealers. For Voltas, dealers indicate that the company has implemented price hike across its portfolio. For room ACs, the price hike is anywhere between 7.5% to 12%. For refrigerators, that is the Voltas Beko brand, the price hike is anywhere between 4 to 5%. And for washers and coolers, the price hike is anywhere between 8 to 10%. And that is also one of the reasons why the stock has perked up nearly 5% in trade today. For Shriram Finance, post the Samman Capital approval from RBI, the buzz on the street is that Shriram Finance is also expected to receive some approval either from CCI or RBI, that is expected to come in soon. So keep an eye out for that counter as well. Sun Pharma, that stock has been gaining in trade, but dealers indicate that there are some sell flows on the HNI desk that they are seeing at the higher level on this counter. Now, dealers are expecting some negative news flow that could come in for Sun Pharma going forward, so keep an eye out for that counter as well. And lastly, when it comes to SBI, IndusInd Bank and Jubilant Food, there are buy flows on institutional desk on all the three names. Strong buy flows, both foreign and domestic institutions have been accumulating these counters, and delivery volumes are expected to be on the higher side. Got it. Interesting set of names, Somit. Thanks so much for highlighting that for us. Shriram Finance stands out, one of the top gainers for the Nifty 50, gaining over 6% at one point. Let's see if that continues to be the case. Pull that up. Well, very close to 6%. And the question, therefore, to you, Chakri, is that Samman Capital, does it open the doors for Shriram as well? And what is your opinion? It slid a little bit from the top. It had quite the gain over the course of the last 1 year or so, and then it's fallen a little bit. So is this an opportune moment to add to the stock?
I think there are two reasons. One is, of course, the stock had corrected significantly over the last 3 weeks going into the war, and because of rising yields and the impact it will have on its earnings. So now that the oil prices are falling and the risk on the yields has come down, so the earnings projections, and therefore are likely to be maintained and not as bad as feared before. And the second is, yes, indeed, Salman Capital does open the door for Sriram also. But I think Sriram in itself, as it stands as a business, I think there is still valuations that are attractive at current levels.
Got it. Okay. Update coming through for Kotak Mahindra Bank. And just a short while back, they sent out a clarification on a news report that suggested a scam or a fraud, like you saw in the case of IDFC Bank, with regard to their branch in Panchkula. Now, what they've said is that they've initiated a reconciliation of fixed deposits and accounts of the Panchkula Municipal Corporation. Essentially, there is a mismatch in what the Panchkula Municipal Corporation said that it had with the bank, including fixed deposits and bank accounts, and what the records showed. And that difference was as much as 150 crore rupees allegedly. The bank has confirmed that all the KYC documentation as well as signatories and instructions of the account holder were in order, and it has gone through a significant portion of the amounts under review that was has been reconciled. But what they're saying is that the reconciliation process is continuing in an orderly manner. In the meanwhile, the bank has filed a formal complaint with Panchkula Police on that irregularity, and the bank is cooperating with the municipal corporation as well as the government and law enforcement agencies. So it's an interesting story, and one hopes that this is something that gets resolved very quickly. Remember, what happened with the IDFC First Bank was that the entire amount had to be provided for, and so therefore it is something that needs to be addressed, and the extent of the damage needs to be assessed as well. We'll have to follow up with the bank and wait for more clarification.
But one aspect I want to talk about over here is the way IDFC First reacted on the back of the fraud. You're not seeing that kind of a reaction that's coming on a Kotak Mahindra Bank, which is very interesting. Right? The size of the bank is different, the size of the fraud is different, but the nature somewhere is very similar, right? So I'm very surprised. I mean,
government
the stock,
entity.
Yeah, correct. And the stock did see some bit of cooling off, but it's again regained that ground as well right now as we speak. So I think this is something which we need to look at as well.
Yeah, certainly. We've got Harendra Kumar, Managing Director at Elara Securities, joining in right now. Harendra, thanks so much for taking the time. Not necessarily a comment on this particular issue and specifically to Kotak Mahindra Bank, a broad comment on banks. I was asking a little while back, this is a cohort of stocks that took a bit of a battering because I think a lot of views on the street changed with regard to inflation projections and what it means for monetary policy. And if we're looking at the potential for hikes down the road, it changes the math on earnings as well. So in that context, with things having cooled off just a tad bit on the geopolitical front, would you say that we're at an opportune moment for banks right now?
Yeah, that's correct. But it remains to be seen whether it's going to be private banks or public banks. I think what has changed for the private banks over the last some years is there's no product differentiation between what they do and the public sector banks do. In fact, if you look at the NPA trajectory and the accretion to NPAs, the PSU banks are doing much better than private banks. Number three, the opening up of the FTA agreements means there's more competition for like to like with respect to foreign banks operating in the same space as private banks. So we see continuing compression in the price to earnings multiples for private banks and some parity emerging between public and private. So I think that's a very big factor going into the future. So that is the reason why this correction is not being brought into. If you would have seen now today, the stock price rebound actually has been quite disappointing with respect to the private banks. So I think this is a very, very material movement, and the ownership is quite significant in private banks. So if the ownership support, liquidity support is not coming back, we don't see them bouncing back faster in the case of higher volatility.
Okay, so that's with regards to where the overall market setup goes. Harendra, good afternoon. This is Hiral on this side. Now, what I want to know is the geopolitical issues that everyone is talking about. You have Iran, who's come out and now said that the 15-point negotiating sheet that Trump has given them is something that they have looked at. Maybe they'll be deliberating on the same or not is anyone's guess. And to add to that, we've just got some data pulled up in terms of Iraq invasion versus the current Middle East geopolitical tensions that are coming in and what that data tells us. If you just pull up the screen, in 2003 during the Iraq invasion when Nifty was at around 1003, we've taken the pre-event levels and then if you have to look at March 20, 2003 when it ended, on the day of the concerns we had Nifty which closed higher or by over 2%. Likewise, if you see the current issue, Nifty opened gap down 2% and closed down with 1%. So there was that mild recovery that did come in on the day of this event. And this is about Iraq invasion and the Middle East crisis. Now in the next month, Nifty actually fell by 8 to 9% back then in 2003. And simultaneously in the next 15 days of the Middle East crisis, you've seen Nifty which has fallen by more than 10% already. And the recovery that's coming in 2003 in the next 8 to 9 months, we saw 120% recovery where Nifty entered a bull run again. So far, Nifty has just rebounded more than 4% in the last 2 trading sessions. Now, taking this analogy into consideration, I know both of the wars have been slightly different, but in the end, it is a crisis. What would your read be in this kind of a situation?
Yeah, first and foremost, 2003 was a very different macro setup. India was coming out of a very prolonged bear market and earnings compression. And we were just entering a phenomenal rate cut cycle and a liquidity boom in the US. So that's what is fundamentally you can see is the response to the markets. That is not the case because we are trading at reasonable valuation and valuation comfort has not been a variable that is supporting our markets. So hence, when we saw this event playing up, the FIs have sold like there's no tomorrow. So in fact, if you look at it now, the entire market capitulation in the Bank Nifty and the Nifty Auto Index has come from FI ownership. So if it doesn't return and we don't get the liquidity or support, the markets could take some more time to recover. But that's so much on liquidity. But otherwise, the war doesn't do much to the India's macroeconomic construct. What it does, of course, is the fiscal space that was available to the government gets a little constrained. In our view, as of now, the preliminary numbers seem to be around 3 lakh crores. Yes, that does put pressure on yields or the government's ability to go and spend out more. But otherwise, the macroeconomic construct remains pretty much under control. So we are expecting a small moderation because of in the earnings with respect to the cost increase of the energy basket, but the market should hold. So we stay constructive at these levels. If the war comes to an end within the next 30 days.
So in that context, then, Harendra, what would be the top picks at this moment? In that, if you were to allocate, and a lot of people attempt to buy the dip, a lot of people are saying that this is that dip. So if you were to allocate right now, what would be in order of priority or preference?
Yeah, so obviously what we've seen is that after energy shock, the Nifty Auto Index did behave, while the Ukraine example is the more recent example that needs to be analyzed. So at that point of time, the Nifty Auto Index actually did really badly. And after the index, the war kind of went into a stalemate, the auto index had a big rally. So we're expecting great levels for the Nifty Auto Index at this given point of time. The structural catalysts are in place, and I don't think the momentum is going to end. We're going to have the pay commission, which is going to come up and put more money in the hands of the Indian citizens. So I think the momentum will resume in the auto index. Second, of course, is what you've seen is the Nifty Energy Index. You'll be surprised that this Nifty Energy Index has only fallen 4%. So I think there are many catalysts and tailwinds. Of course, the government pushing for more PNG connections, pipe grid connections, clearing more pipelines, pushing more alternative energy sources, nuclear energy. So I think the clear pivot for the government will be to de-risk India's energy sources much more. So that will get government so much more additional attention. So the auto index, energy index is something which is right for alpha generation given the current context.
Got it. All right, on that note, Harendra, thanks so much for taking the time. Pleasure speaking with you. Now, let me throw that question to you, Chakri, because we've asked you about individual pockets, but we haven't asked you what you like at this moment. And the question I think a lot of people are asking is, what is relatively insulated from these external shocks that we're seeing?
A couple of things need to be kept in mind. In addition to what Harendra said about 2003 to now, that we were in a macro cycle. India was the first time in its life began an infrastructure spend, and then it followed for the 5 years after. And rupee, most importantly, was about $40 to the 40 rupees to the dollar. Now India is rupee is 94. So which means the same oil purchases have gone up, have doubled and tripled over the last whatever years, 20 odd years. And that has, changes the math for India's fiscal and therefore its ability to spend on infrastructure and therefore how much legroom the market has in the following several months. Clearly, there is likely to be a rebound in financials, cement, metals, all these sectors which fell. But the pace of the rebound will depend upon how quickly oil comes down from, let's say, wherever it is at about close to 100. Will it come down to before the war of 65, 70? It's unlikely, they say. Will rupee come down from 94 to, let's say, even 80? Then the equation changes. Otherwise, still there is some amount of caution.
So Chakri, we're talking about the new normal in terms of the rupee dollar, a new normal in terms of where crude could settle. In this kind of a scenario, if you have to talk to investors and say, okay, probably this is the time where markets have come off highs. You are seeing that recovery which has started to come in. Whether this will be a sustained up move from here or, there will be bouts of correction that keep coming. And if someone has to start allocating resources, what would that look like in terms of pecking order? If you can give us your top sectoral bets, the top 3 and your top 3 stock calls.
In terms of sectors, it's clearly financials and some of the cyclical industrial stocks have corrected quite a lot, and some of the metals valuation-wise. So, today, whether State Bank of India still trades only at probably one-time book, or if you look at a company like NBCC, NBCC is, a company which is very domestic in its construction spend, and therefore it's unaffected by global activities, and I think it's definitely worth buying. You look at the cement, all petcoke prices aside, companies like JK Lakshmi have corrected very significantly, and even Ultratech for that matter. And therefore, they all offer a good amount of upside, a good 15-20% or more from the current levels.
Got it. Chakri, on that note, thanks so much for taking the time as always.
Thank you.
Right, we're holding on to gains of about 1.7% for the Nifty 50, about 400 points, so about 150 points off from the high point. But you can't really complain. The broader market's actually looking sanguine at this point and doing better than the benchmark. 2.3% for the mid-cap index, about 2.5% for the small-cap index, holding out not too far away from the high point of the day. We have to slip into a very quick break. We'll get you the strategies that you should employ heading into the market holiday and whether or not you should carry any positions that will take you into Friday. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show. that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi. And meaningful corporate conversations.
Welcome back to India Market Close on NDTV Profit with Alex and myself, Hiral Dadia. You know, it's interesting to see how the geopolitical aspects are evolving when you talk about the West Asia war. Now, you know, all this while the chatter was of United States said to have sent Iran a plan to end the Middle East war, and this was a 15-point plan that was delivered via Pakistan, whose army chief has emerged as the key interlocutor between the United States and Iran. That is what that everyone was talking about. Now, the latest development coming in over there is that the 15-point plan is something that Iran has at least accepted that they have received it. Any conversations around it happening or not is anyone's guess yet. We don't have the details. But what would this actually mean? Let's get in Purnima Nath, global strategist, to talk to us about it. Purnima, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. You know, we've been talking about the letter that United States had sent to Iran, and this was the 15-point plan. And the latest that we're picking up so far is that Iran has now at least acknowledged receipt in terms of the 15-point plan. I mean, details, obviously, all of us know what those 15 points, you will be able to see them on the screen. What do you make out of this communication now?
Thank you so much for having me. Namaste, Jai Hind. First of all, Iran has responded with a wonderful rebuke, actually. It says United States is negotiating with itself. Prior to that, I know that Iran has responded saying you are fired at that time when he has given 48 hours ultimatum. This has become such a political theater, especially from Washington, D.C. Unfortunately, I cannot recognize what Trump that we have voted for, or what Trump that we have supported, what Trump that we have campaigned for, what Trump that we have elected, and the pride that we have had at one point of time last year when we elected President Trump, thinking that there is not going to be a new war. He's going to bring peace. He's going to bring our cost down. And domestically, unfortunately, everything that we have thought today has been proven wrong. We have been proven wrong. We have been backstabbed. And this is one of the reasons why I'm speaking quite loudly, and I've become one of the harshest critic of President Trump as well. I don't think he's listening to ordinary people. He's only listening to Wall Street. He's listening to billionaires. He's only listening to people that can bring him $1 billion deals. And that's how he goes by that. Unfortunately, he didn't understand what Iran is going to do. He thought that Venezuela model is going to work for him, and that didn't. Obviously, Iran's retaliation was impressive.
So, okay,
and
fair.
It
Purnima.
not only just showed resilience, but also showed that without international support, Iran could have achieved so much.
Let me ask you something then. Since you're talking about the Trump that you voted for and the Trump that you supported from last year, and the fact that from your perspective, he has not fulfilled promises that he has made. Is that reflective of the fact that popular support on the ground is shifting for the president and for the Republicans in general? And are we likely to see a shift in the politics as it takes place in the midterm elections? Do you think that this will result in a change in the elected representatives once that midterm election takes place?
A great question. First of all, the shift is happening within the Republican Party. I'm a Republican Party member, but the folks like us who's actually centrist, center to right, we had a different kind of America First agenda. The way we have interpreted MAGA, which is Make America Great Again, was different from invasions, different from coups, regime changes, bombing and killing and slaughtering and dictating other countries. Our country is going through a massive shift at this point of time. We have seen inflations, we have seen job numbers. Even in President Trump's last year, the first year of second term, 2025, job numbers is 1.1 million, which is half the last year of Joe Biden's, which was 2 million. The inflation is constantly rising. The mistake that he has done through tariff, through terrorizing, through threatening global leaders isn't something that I was personally expecting.
Sure, but
when we look at different, in general, what's happening in the Republican Party, there's a shift. There's one faction, which is MAGA faction, which is Republican. They call them conservatives, but they're basically neoconservatives, which is white Christian supremacist.
No, but I mean, let's not get into stereotyping anybody, but let's talk about the facts. Let's talk about the facts. And the question that I asked was whether you anticipate a shift in the elected representatives at the midterm elections or after the midterm elections. Is there likely to be a shift in the voter base? Was the exact question, Purnima.
So two ways I want to answer that. So I was not actually stereotyping. This is actually happening in Washington, D.C., whether it's Pentagon, whether DHS, whether it's USCIS, whether it's H-1B conversation. We are seeing people like us who's Hindu, who hasn't not denounced the Hindu religion or not bashing India as the mother country is targeted here because they're saying that we're not assimilating, we don't understand what America is, we shouldn't be even here.
Sure.
And these are what is causing major issues in the party also. So now to answer your second question, whether we're seeing a shift, yes, we are. And I think it's highly likely that President Trump is going to come with some kind of tactics to even cancel this 2026
we'll
election.
See soon enough.
So
we'll see soon enough. Purnima, thanks so much for taking the time. Thank you so much for taking the time and for sharing your opinions with us. All right, let's go across to Shivangi Sarda. and Dharmesh Kant joining us at this moment. And let's talk about the equity markets as they stand right now. Shivangi and Dharmesh, good afternoon, and thanks so much for taking the time. Shivangi, I'll come to you first. We seem to be holding out with gains of just about 1.7% for the benchmark Nifty 50. And it is, in fact, the expiry day for the month for the Sensex. So we're seeing a relatively calm end to this particular series. What do you take from it, and what do you take for Friday's trade as well?
Thank you for having me. So we've seen that respite is definitely seen today in the markets. We have recouped the losses of the last 4 trading sessions for Nifty, and we are comfortably holding above the key levels. Now, 23,333 would be an important zone to watch out. If it manages to hold above the same, then we could expect an upside towards 23,650 and 23,900 levels. Now, of course, we have, almost concluded the expiry monthly for Sensex, but we have the Nifty expiry also to look out for. And we are expecting a little bit, volatility to continue. But of course, buy on decline stance would continue as the sentiments can be seen improving with the improvement in the global concerns. And we've also seen a cool off in the India VIX. Which is also adding to this strength. Now, of course, India VIX is still above 24.5 levels, which will continue to add to the volatile cues in the option premiums. Talking about Bank Nifty, we've seen that some of the NBFC stocks have today, supported this index. And although underperforming the broader market, but still the Bank Nifty is holding above 53,500, which will become an immediate zone to watch out for the next up move towards 54,300 odd levels.
So that's with regards to levels to watch out for. Ramesh, seeing the texture of the market right now, would you advise buying anything? Because it seems the markets are slightly happy in the last 2-3 days.
Yeah, thankfully so, but the market is happy in the last 2-3 days. Otherwise, it was a very tough situation handling clients and explaining them things. Looks like, before the war started, we turned bullish on consumer durables, particularly on the AC manufacturers. The trade has turned well as of now. Energy electronics was our topic out there. And we have been recommending, when the fall was happening, buying on declines, the automobile space. So Hero MotoCorp, Bajaj Auto, Maruti, and the likes. So these are the sectors where we were, growing a staggered kind of a buying approach. So the method continues. Even L&T a couple of days back when it was hitting 5% lower. There again, a staggered approach was being adopted. So what we are telling to our clients is, be prepared to see 10-15% further downside on a bad day or if situation worsens from here. But quality names like L&T, Hero, Bajaj, LG Electronics and all should be fine with that kind of a fall. So that is how we approach this market. And the other point is, if things settles and the market goes up from here and there is no looking back, so then also buying 3-4% higher doesn't harm in this scenario, because most of the stocks have already corrected 20-25% from the highs. So buying 5% higher would be there's no harm there. So net we are not very clear whether this will go which way. But as of now, as a strategy from investment perspective, yes, selective buying we have been recommending, and people have turned bias in last couple of days.
Where, Dharmesh, where are you suggesting selective buying? And good afternoon to you.
Yeah, good afternoon, Alex. Apart from the regular names in banking, financials, automobiles, metals, Larsen & Toubro was the latest inclusion out there. And the other space before the war broke out was the consumer durable on the AC manufacturing side, because the numbers have started trickling and Feb was good for most of the players out there. They were seeing decent traction, and LG Electronics, they remained a topic. So these are the counters. Apart from this, we are still holding on, and we are seeing how the development is evolving.
Okay. All right. Let's talk about PG Electroplast. It's one of the stocks that reacted pretty sharply in trade. And this is, of course, it's off the high point of the day. At one point at the start today, it was up as much as 6%, 7%. And this is on the back of the fact that it has seemingly resolved its LPG supply issues and restored room AC production to near normal levels after installing an alternative fuel source. Mahima joining in to tell you about why this is important. Mahima, the most important time of the year for these companies, because ultimately this is when the highest demand comes through, and they seem to have done something that is working for them.
Absolutely, Alex, and certainly a positive one coming in for PG Electroplast at the right time, right? Because as you rightly mentioned, peak summers is when AC demand is at the max, and this will have a ripple effect on Blue Star, Havells, Voltas, etc. as well. For PG Electroplast, as you rightly mentioned, they've reported improvement in room AC production after resolving the LPG supply issue. The stock has almost hit an intraday of 9% in trade today, and what they're saying is that this is they've identified an installed alternative to LPG. The current room AC production is almost normalized now, and they have addressed this entire crisis to a large extent, is what the management commentary is coming in. Now, why this will have a good effect on Blue Star, Voltas, all of them are buzzing in trade and Havells as well, because this will normalize production for them in terms of peak summer coming in from PG Electroplast, of course. So for them, demand supply will not be an issue. The overall, production being normalized will also reduce the risk in terms of supply chain for these companies, and this will also improve their sales visibility when it comes to April and May, which will be seeing peak summers. We've also talked about this earlier as well, where that El Nino might hit and might lead to peak summers coming in till the end of May, and that is why we could see peak demand for ACs. Now, PG Electroplast has given the guidance for FY26 at that 5,700 to 5,800 odd crore, and expect to reach profits of 300 odd crores by FY26. We'll have to wait and watch out for whether that guidance they achieve or not. And lastly, Nuvama has also come out with an EMS, with a view on EMS sector, and what they're saying is that the recent weakness that we saw in the past for all of these EMS players, according to them, this is the right time to make an entry into Amber, PG Electroplast as well as Havells. So this is the overall view as to what's happening with PG Electroplast, and has effects on counters like Blue Star, Havells and Voltas as well.
Okay, so that's with regards to PG Electroplast and the impact that any of its customers are seeing. Shivangi, on the charts, do you like anything from a Havells to a Blue Star, a PG? Because PG has come out and said that, the supply concerns are easing with one of the suppliers, it's having a ripple effect on the others as well. But what are charts indicating?
Yes, Hira, absolutely. These stocks have made a good rebound. Of course, good amount of short covering can be seen. If you look at Havells, this has bounced back from the low of 1,200 odd levels, and it is holding quite well with a good closing as well. But then, for a Havells, I would suggest that one more confirmation would be apt for this stock. Now, of course, the other sectors and stocks have also witnessed a good amount of recovery. So we could focus on the entire, pack as a whole.
Okay. Dharmesh, your view from a fundamental perspective, because, we've lost Dharmesh, but Shivangi, apart from these names, EMS as a space is also seeing some good traction over the last couple of days from McCain's Technologies, Amber, Dixon, at least in terms of where charts go. Anything that you like in this space as well?
So we've seen that, of course, there has been a lot of good momentum in these stocks, but then, these have also fell by, quite drastically in the last 4 to 5 odd months. So some bit of consolidation would, be seen over here, or would be expected here before it starts the next leg of rally.
Okay. All right. Let's talk about more stocks that are buzzing in trade. And this is on the back of news. We might have started off with a little bit of a lean list, but that's built through the day. Sharad joining in to tell you about some of those. Sharad, some stocks reacting very sharply in trade today.
Well, that's right, Alex. And largely the BFSI space is where the attraction is coming here. Samman Capital, of course, we have seen a good up move coming in as slightly the stock is off. But RBI has cleared IHC's controlled acquisition of the company and SFL, and good volumes are also seeing here. RBI has waived the public notice period for the deal, and Avenir, which is the arm of IHC, they will be adding in roughly 900 crore rupees via the preferential issue. Now, the stake itself will be rising and it will be going up from 41% to almost 63.36% post the offer. The second stock, Deepak Fertilizers, remember that crude fall is happening for the second straight day and strong volume buying is coming in this counter. The demand trends in fourth quarter remain strong, especially on the Kharif season, and the government interventions in the fertilizer sector is something which is keeping the fertilizer stocks up. iFinance management had spoken exclusively in KYC, and they stated two important points in our discussion. They stated that their business model, higher yields are there compared to peers, which is offsetting the asset quality deterioration overhang which is there because of the business model, and they expect the fourth quarter disbursements to be around 500 crore. That means around 35 to 40% of disbursements will be coming in the fourth quarter. Also, lastly, Fino Payments Banks, that's an important operational update coming in, and there's a same factor coming in as what we had seen in iFinance, is they are also expecting a surge in the fourth quarter referral loan disbursements, and fourth quarter they're expected to achieve 90% of the 9-month FY26 disbursements as well, and there's an acceleration happening especially in the rural credit as well. So overall it's a positive operational update coming in for Fino Payment Bank.
Got it. Okay, let's talk about the stock, right? Because it's up 10%. It's at upper circuit right now. So Shivangi, the question to you on the charts, obviously it does not make sense to ask whether you should buy in at this moment. You can't. But the question is, if you've held, do you continue to do so, and what are the levels that you would keep in mind?
There would...
Yeah, we couldn't hear you. Go ahead now.
Yeah, definitely there has been quite a lot of news-based action in this one. But on technically speaking, of course, we've seen that this stock has seen quite a lot of downfall in the last 2 years. And I would suggest, for a stabilizing factor here for again to, start momentum picking up. But there are, the other stocks in the same sector that one could focus on if we want exposure in this one.
Okay. So that's with regards to Fino Payments Bank locked in upper circuit as we speak. But moving on, India has actually moved to curb cheap imports in the rubber chemicals space. Now, with the DGTR recommending steep anti-dumping duties on shipments from China, the European Union and the United States, these are the regions from where we are looking at in terms of the anti-dumping duty. We'll get Nimit to join us with more details on this one. But let me come to you, Shivangi, on the stocks that will get impacted on this, because you're talking about tire rubber sector, rubber manufacturers as well. So specifically tire companies, JK Tires, CEAT, what are charts indicating?
So, of course, auto stocks are looking quite positive, and of course, there will be some bit of movement in the auto ancillary pack as well. Now, of course, looking at Apollo tires, or for that matter, the other tire stocks, they're looking quite lucrative at these levels because they've consolidated in the last 7 odd trading sessions, and we've seen some bit of stabilizing here. And of course, these stocks are looking quite positive. Apollo Tyre is looking out for the next targets of 440 levels and then 450 with a support of 412 zones. And in the auto pack, one could also look at a Eicher motor.
Okay, all right. Let's talk about that update that Hiral was just mentioning with regard to the anti-dumping duty on certain chemicals that are used in the rubber space. And in the processing of rubber, so specifically for tire companies and certain other entities in that space, this is an important update. This has to do with a request that Nelco has put through, I believe. Nimit is joining in to tell us more about that. Nimit, what is the update here? what component of the inputs for tires or otherwise are we talking about?
Yeah, it's a bit of a mouthful. It's called sulfonamide accelerators, Alex. And usually cheap rubber sounds good, but not for Indian manufacturers or the Directorate General of Trade Remedies this time, because they've slapped excessive remedies on imports of this product that's used in rubber manufacturing, particularly tires, especially from China, the EU and the US. Now, they found that, in fact, from the US, a 120% import duty has been put on, dumping margins as high as 110% from the EU and 30 to 40% in China. Now, these are substantial because they actually, the duty is only to the extent of what the price was under the allowed price. So you can imagine that the price that was being dumped into India was 120% lower than what Indian manufacturers were putting out at the time period of the investigation. Now, what this means is that the price of tires in India will go up. Input margins for everything that use sulfonamide accelerators will go up. This will affect tire companies, Apollo Tires, MRF, Seat and JK Tires. Also, NoSil and other manufacturers of this product, of course, happy because they will now be able to compete at a fair price that these products are sold at in India. The price is bound to go up, and this will benefit these companies, and you might see some action here. But overall, tire companies will be affected by this. Costs will go up.
Got it, got it. All right, Nimit, thanks so much for that. And I meant NoSil. NoSil is the name of the company that produces this chemical. All right, just about a minute and a half to go. And so therefore, Shivangi, thanks so much for taking the time. Let's talk about how the markets are closing. And let's pull up that screen. About 1.7% we're holding, with having dropped about 70 points odd, 60 points odd from the high point of the day. That's not too much in the context of a close to 400-point gain, and the broader markets look pretty good. Of course, towards the end of the session here,
you've seen more of declines.
The declines have actually
that's
gone
narrowed, you know. I mean, and that's what becomes slightly concerning. If we can just have the advanced decline ratio intraday chart, because that'll tell you what's happened. There you go. I mean, just not a major one, but a tad bit from where we actually started of the day. So, I mean, from 125, actually, if you go to see, it's a 525. So it's almost 3 to 4 times the number that we are seeing in terms of the declines.
The base is always important.
The base is important, and this is just with a pinch of salt, so that people don't get carried away with what's happening in the markets as well. Very quickly, let's just look at the components, or in terms of the heat map of Nifty 50 and see what's happened, whether we are where we started off at, exactly there. It's just BEL that has come in the red with cuts of 0.3%, but TCS, Power Grid, Tech Mahindra, these were the ones which were under pressure. This absolutely looks like where we started off, kind of at 230. So no major changes there with your financials powering up. You have L&T, which is continuing.
But I'll tell you what has moved. What has moved is right here, and once we get the camera back on, I'll be able to showcase this, because the second heaviest weight on the Nifty 50, which is Reliance Industries, which was previously trading with gains of about 0.5%, is ending with gains of just about 0.1%. And so therefore, as a result of which, you see a bit of a cool off. We're ending at 1.7% higher, and if it was for that 0.5% gain for that Reliance Industries, you would probably end close to 2%, if not maybe 1.9%.
But I think a closure at least levels of 23,300, even if that's the number, is a good sign that we need to pick up. That it's not going below that 23,300 mark on a day which is expiry, and people will be squaring off positions as well. In terms of broader markets, let's look at the NSE 500 to see the components right now as we speak in terms of gainers and losers. There you go, Spark, Birla Corp. Fertilizers, Godfrey Phillip is up in trade, Sterlite Technology, so smart moves coming in there. And Pharma as a pack, Alex, was absolutely strong. Losing out again, Aether, Uflex, your amines companies, a lot of your crude dependent companies, if you go to see, are the ones which have seen much of the pressure today as well. So it's an interesting day. I don't think so anyone's gone unhappy just before the holiday.
No, particularly because of the way that broader markets over the course of yesterday and today have done. The only question is, and I hope that this does not come to pass, that something significant happens on the geopolitical side that we'll have to take into account for Friday's trade. But that brings us to the end of this edition of India Market Close. From the entire team that put this show together, and Hiral and myself, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you up to speed when it comes to headlines, but also everything that is happening in the markets as well. First things first, let's talk about the market action then. Market continues to be in recovery mode. Nifty 50 manages to close near 23,300 after touching an intraday high of near 23,500. When you talk about Sensex as well, you talked about that as well, ending the 1,200 point uptick also that you had coming in. For the Sensex, in terms of broader market, small caps outperformed sharply, while mid-cap index also ends the day with over 2% gains. Moving on, then let's talk to you about the broadly positive session on the last rate in terms of the sectoral picture as well. So sharply tilted in the favor of green, realty and PSU banks led the charge, riding strong buying interest, while metals and financial services also posted solid gains. When you talk about the market mode, that stayed constructive, supported by selective buying and improving sentiment. Biocon is in focus as Eli Lilly plans to exit several insulin products in parts of Europe. Analysts, in fact, are saying that this opens up an opportunity for players like Biocon with approvals already in place for key insulin biosimilars. The company is well positioned to step in and capture market share left behind even as global investors scale back. Moving on, then let's talk to you about Natco Pharma that is in focus after its board approves the demerger of its agrochemicals business. The unit will be housed in a new subsidiary called Natco Crop Health Sciences. When you talk about shareholders, they're receiving shares in the new entity on a one-to-one basis. Post the demerger, Natco Pharma continues to hold a minority stake while investors get direct exposure to the agrochem business. Saman Capital was also in focus after the RBI clears Avenir's acquisition of control in the company and its subsidiary SFL. The regulator also waives the public notice period, smoothing the way for the deal. Avenir, in fact, plans a large capital infusion through a preferential issue, taking its stake also sharply higher. When you talk about the move, that is seen strengthening the balance sheet and supporting future growth. Moving on to an interministerial briefing today, the government has assured that the crude oil situation remains normal amid global tensions. All refineries are operating at optimum capacity, with India's annual refining capacity at 26 crore tons as well. So there has been no hike when it comes to petrol or diesel prices, and supplies continue uninterrupted. That's the word coming in from centre as well. And officials, in fact, are urging citizens not to panic or indulge in panic buying of fuel to ease pressure on LPG. You do have Delhi that has allowed 24/7 work for PNG infrastructure. A notification was issued yesterday as well to also expand PNG connections with streamlined application fees and timelines. In the last 25 days, authorities, in fact, have issued 2.5 lakh new PNG connections. Shifting focus back to stocks, PG Electroplast was in focus after the company says that it has installed an alternative to LPG room air conditioner. Production is now close to normal with fuel constraints largely addressed for now. The update, in fact, is boosting confidence when it comes to summer season readiness, even as the stock moves up sharply. And another stock that was in focus was Sagility, that was in focus on the back of Nomura initiating coverage with a buy call as well. The brokerage likes the company's dual play of value and growth driven by outsourcing demand and efficiency gains from AI with pressure on insurer margins. Analysts are in fact saying that this actually works in the company's favor as pairs are looking to cut costs as well. And when you talk about margins, they're seeing holding steady even as growth remains strong. Talking about Acme Solar Holdings next, that is in focus after commissioning the second phase of its battery energy storage project in the state of Rajasthan. The latest phase adds to the company's storage capacity and strengthens the integration of renewable energy into the grid. The project is expected to support peak load management and improve grid stability in the state. On to Aventel next, that is in focus after the company backed a sizable rate contract for the supply and maintenance of satellite communication equipment. The order is to be executed over the next 3 years, providing clear revenue visibility. On to Vari Energies, that was in focus after its board approves a large capex plan to set up a dedicated solar glass manufacturing facility. The new plant will be operated through a wholly owned subsidiary, Vari Green Glass as well. The move comes amid tight supply conditions in solar glass and is also aimed at improving availability and cost visibility for the company. When you talk about the stock that was buzzing away in trade with a 3% uptick coming in. Moving on to Deepak Fertilizers, that was in focus as crude prices fall for the second straight session. You did have easing input cost that was back in the spotlight. The stock has seen strong volume buying, reflecting positive sentiment. Demand trends in the fourth quarter remained robust, while continued government interventions in the fertilizer sector are offering visibility and support. Lower energy costs, steady demand and policy backing together are improving the near-term outlook for the company. Moving on then, let's talk about Fino Payments that has delivered a strong operational update, reporting a sharp acceleration in the fourth quarter referral loan disbursements as well. The bank is saying that the fourth quarter alone is set to achieve nearly 90% of its 9-month FY26 disbursements, highlighting that rapid momentum really. And you're also talking about 700 crore that was disbursed in the 9-month FY26. So when you talk about Q4 referrals, they've already touched 540 crore driven by improving rural credit demand. When you talk about the company remaining on track to meet its 1,300 crore loan disbursement target for financial year 26. Moving on then, but staying with banks, Kotak Mahindra Bank is in focus on the back of cooperating with authorities after a reported 150 crore mismatch in the accounts of the Panchkula Municipal Corporation in Haryana. When you talk about the state's Vigilance and Anti-Corruption Bureau, they've been asked to initiate an investigation after officials found that a 58 crore fixed deposit allegedly did not exist at the bank Sector 11 branch. A broader review of accounts revealed that there were discrepancies, in fact, that were found exceeding 150 crore rupees, with authorities saying that possible collusion cannot be ruled out as the probe gets underway. Moving on then to Puravankara, that has laid out an aggressive growth roadmap unveiling 30 residential projects across South India and Mumbai. The expanded pipeline carries a gross development value to the tune of about 55,000 crore rupees. And this is in fact underscoring strong expansion intent across key urban markets. The move is signaling confidence when it comes to housing demand as the developer scales its presence in premium and mid-income segments. Moving on to A Finance, that is telling NDTV Profit that higher yields compared to peers continue to cushion the impact of asset quality concerns. In fact, the management is also saying that when you talk about the key operating parameters, they're remaining largely stable with low volatility even amid macro challenges. The lender is expecting the fourth quarter disbursements of around 500 crore rupees, with 35 to 40% of annual disbursements coming in the last quarter. Importantly, they're also talking about exposure to the restaurant segment that is impacted by LPG shortages. That's limited to just 1.5% of the overall portfolio. Moving on then on to UBS, that has downgraded Indian equities to a neutral rating, citing rising geopolitical risks as well as sustained energy price pressures as well. So when you talk about the word coming in from the brokerage, you do have the India strategy head, in fact, who's warning that Indian markets remain highly sensitive to oil prices. Given the economy's heavy dependence on imported crude, LNG and LPG, something that we've been talking about throughout the course of the show, especially through the Strait of Hormuz, elevated energy costs, in fact, UBS is noting, could weigh on growth, external balances, as well as corporate earnings in the near term, while the brokerage also is remaining constructive on India's medium-term growth story, also saying that near-term risk-reward is looking more balanced, particularly if high energy prices persist and pressure FY27 earnings. Moving on then on to business news, the Finance Bill 2026 has been passed with key amendments to the tax framework. The government introduced retrospective changes to nullify certain favorable court rulings on technical grounds. These include empowering the tax department to reopen cases earlier struck down, revalidating past tax orders, and ensuring procedural defects like missing DIN or lapses when it comes to approvals do not invalidate proceedings. When you talk about the minimum 30-day response window that is provided for reassessment notices, and you do have some of these orders that are now going to be uploaded on the IT portal for faster implementation, and non-payment of tax dues is something that will no longer attract arrest, though recovery through attachment continues. Now, the changes aim to reduce litigation and improve tax administration efficiency. Moving on then, and let's get you the word coming in from the Directorate General of Trade Remedies, or DGTR, that has recommended steep anti-dumping duties on imports of key rubber chemicals. In fact, when you talk about the proposal, zoom in on the target here, it's targeting shipments from China, the European Union and the United States to protect the domestic industry. Now, dumping margins are estimated as high as 120% from the US, up to 110% from the EU and 30 to 40% from China. NOSIL, the main domestic producer, has flagged material injury from low-priced imports as well, and the duties if imposed will apply for 5 years, are likely to raise input costs when it comes to tire manufacturers. So add something like an Apollo Tyres, MRF, Seat and JK Tyre to the list as well, and the government is going to be taking a final decision after stakeholder comments. Moving on then, a New Mexico jury has ordered Meta Platforms to pay $375 million in civil penalties. Now, the state, in fact, has sued the company for violating consumer protection laws by misleading users about the safety of Facebook, Instagram, and WhatsApp. Prosecutors accuse Meta of enabling child sexual exploitation and prioritizing profits over child safety through addictive features and inadequate standards. Now, the verdict is coming in after a 6-week trial and less than 1 day of deliberation. Meta is saying that it will appeal this particular decision. This marks the first jury verdict against a major tech firm on such child safety claims. Moving on then on to OnePlus, that could shut down operations in several global markets as early as April 2026, according to a new report. The company is reportedly planning to exit large parts of Europe and North America, while also focusing on China and budget segments in India. Some staff have already been informed and offered severance packages. And you do have this particular move that is following closer integration when it comes to the parent company, Oppo. OnePlus India CEO Robin Liu has stepped down and is returning to China. The company is also saying that operations in India continue normally with a local strategy in place. So that's the caveat there. No official confirmation, of course, has been issued just as yet. Moving on then, OpenAI is close to raising an additional $10 billion in its latest funding round from major venture investors. The round includes participation from Abu Dhabi's MGX and a bunch of others as well. It is co-led by Andreessen Horowitz as well, the Shaw Ventures, TPG and T. Rowe Price as well, and with Microsoft also joining. So the fresh capital is going to be bringing OpenAI's total funding from this round to over $120 billion. The deal is expected to close next week at a pre-money valuation of $730 billion. Funds will be used to secure more computing power and attract top talent for AI development. Moving on then, SpaceX could be heading for one of the biggest market debuts in history. Reports, in fact, are saying that Elon Musk's space exploration firm is preparing to file a confidential prospectus for an initial public offering as early as this week. Now, when you talk about this particular IPO, it could target a fundraise of more than $75 billion, potentially valuing SpaceX at over $1.75 trillion. If it goes through, the listing would dwarf Saudi Aramco's record $29 billion IPO, marking a watershed moment, not just for markets, but also for the commercial space industry. Moving on then, let's talk to you about South Korea's SK Hynix that is also planning a confidential filing to list shares in the United States in the second half of 2026. So that's further away than SpaceX now, and this is a move that could raise up to $14 billion. According to reports, the memory chip giant is expected to sell around 2 to 3% of its shares, with proceeds also earmarked for new chip-making plants in South Korea and Indiana in the US as well. The listing, in fact, is coming in as the company is ramping up capacity to meet surging demand from AI data centers, reaffirming its expansion push amid the global boom. Moving on then, let's get you some national news. Delhi Police Crime Branch has dismantled an international arms smuggling network with links to Pakistan, Nepal and Bangladesh. 10 key operatives have been arrested in the operation. Police recovered 21 foreign-made pistols, submachine guns and automatic firearms, along with over 200 live cartridges. When you talked about the seized weapons, they're including advanced models from Turkey, China, Czech Republic, Italy, Brazil and Germany. And the network, in fact, is smuggling arms into India, mainly through the India-Nepal border for supply to criminal groups. Further investigation is currently underway to trace financial trails, also possible terror links. The crackdown is seen as a major blow to transnational organized crime. Moving on, then, Union Health Minister JP Nadda has launched the next phase of the focused and intensified 100-day TB Mukt Bharat Abhiyan as well. And the campaign covers 1.58 lakh villages and urban wards with locally tailored micro plans. It aims to accelerate TB elimination by focusing on vulnerable groups. So that includes urban poor, tribal communities and migrants. Key initiatives include symptom-agnostic screening, AI-enabled diagnostics as well, and portable X-rays, and of course the new TB Mukt Bharat app that will also have an AI chatbot. The government has increased funding tenfold for the program, and the intensified drive seeks to bridge last-mile gaps and achieve measurable outcomes when it comes to TB detection as well as treatment. Moving on, then, actor Ranveer Singh is set to take fresh legal steps in the ongoing Kantara case, which continues to be heard by the Karnataka High Court. The actor has now agreed to submit an affidavit offering an unconditional apology. The controversy dates back to November 2025 when Ranveer mimicked the Deva ritual at an award ceremony while praising filmmaker Rishabh Shetty. The act also sparked, of course, backlash from the sections of the Kannadiga community who said it disrespected a sacred tradition after the video went viral. On to international news, then. Iran has sharply rejected US President Trump's claim that Tehran wants a deal to end the ongoing conflict. A military spokesperson accused the US of negotiating with itself and dressing up defeat as an agreement. You do have Lieutenant Colonel Ibrahim Zulfgari also, who said that Iran is going to never make a deal with the US, not now or ever. He's also mocked Trump directly on state television. The remarks come a day after Trump said that talks are underway following a very big present from Iran. Moving on, then, as Iran rejects any talks of negotiations, the country has launched Wave 80 of its counter-strikes amid the ongoing conflict with Israel and the US. The Revolutionary Guards targeted locations in Israel, including Tel Aviv and Kiryat Shmona, as well as US bases in Kuwait, Jordan and Bahrain. Israel, in fact, has responded with a fresh wave of strikes on infrastructure across Tehran, hitting 2 naval cruise missile production sites. News agencies are reporting that Israeli strikes hit a residential area in Tehran, with rescuers searching rubble as well in Kuwait, and Saudi Arabia said that they repelled fresh drone attacks, one of which targeted a fuel tank at the Kuwait International Airport, causing a fire but no casualties. Fortunately, the exchanges in fact continue even as conflicting signals emerge over possible talks. And on to more potential negotiations, then the United States has proposed a 15-point ceasefire plan to Iran through intermediaries, including Pakistan. Now, when you talk about this particular plan, it's requiring Iran to dismantle key nuclear facilities, halt uranium enrichment, transfer its highly enriched uranium stockpile to the IAEA and suspend its ballistic missile program, and also in support for proxy groups while ensuring safe passage through the Strait of Hormuz. In return, the US offers to lift nuclear-related sanctions, assist Iran's civil nuclear program, and also remove the snapback sanctions mechanism. Iran has countered by demanding full US military withdrawal from the Gulf, complete lifting of sanctions, reparations, and also an Israeli ceasefire on Iran and Lebanon. No agreement, however, has been reached thus far. Moving on, then, late Australian spin legend Shane Warne's family is set to make a staggering 450 crore following the sale of Indian Premier League franchise Rajasthan Royals. Carl Somani, a US-based tech entrepreneur, emerged as the face of a landmark deal with his consortium, on track to acquire Rajasthan Royals for a reported $1.63 billion, approximately 15,200 crores thereabout. When Warne first signed up for the franchise in 2008, he had got a clause inserted in his contract which also earned him close to 0.7% ownership stake for every year that he played for the team. Warne eventually ended up staying with the team for 4 years, thus earning 3% stake in the franchise. And Mohamed Salah is set to leave Liverpool, marking the end of a remarkable era at the club. The Egyptian forward has been one of Liverpool's most prolific scorers as well, playing a key role in their recent success. As he prepares to move on, attention is turning to where he ranks among the club's all-time great goal scorers. His legacy at Anfield remains firmly intact. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Market ends higher with Nifty closing above 23,300 and Sensex gaining more than 1,200 points. Mid and small cap indices outperform with gains of over 2%. All sectors close in green. Rupee ends at a new record closing low of 93.98 versus the US dollar as the Middle East war rattles the currency market. Oil falls over 5% after President Trump said Washington was negotiating with Tehran and said US is offering what he described as a very big present linked to oil and gas, but Iran denies direct talks. Reports suggest US has sent a 15-point ceasefire plan to end the Middle East war through intermediaries from Pakistan. Proposal broadly touches sanctions relief, civilian nuclear cooperation and a rollback of Iran's nuclear program. Israel launches new wide-scale strikes on Iran targeting government infrastructure in the northwestern city of Qazviv. Meanwhile, Iran launches a new barrage of missiles towards Tel Aviv and central Israel, triggering air raid sirens in the region. Lok Sabha passes financial bill that proposes retrospective changes to revive tax cases were struck down by the courts, allowing tax authorities to reopen such cases and also validate past actions that were invalidated due to technical defects. With the Birla Group-led takeover of Royal Challengers Bangalore, Aryaman Birla is set to serve as the chairman of the franchise. Has IPL become a playground for India Inc.'s next gen? A special report coming up on the show. Hello and welcome. You've tuned into Profit 360 and I'm Nisha Podar. Let's take it straight to the top headline that we are tracking today this afternoon. Well, market logged second straight session of gains today. Both the benchmark gains over 1.5% each, both Sensex as well as Nifty. The broader indices, they outperformed the key indices today. Real estate as a sector was the top sectoral gainer. Let's take it across to my colleague Jasmeet, who has a detailed analysis and a roundup of the market action today. Jasmeet.
Well, market ends in green for the second consecutive day in a row. If you look at Nifty 50 altogether, Nifty 50 gains in trade about 1.58% and ends above the 23,250 mark today in trade. Now, in terms of top gainers, we have Shriram Finance and Ultratech, which moved up in Nifty 50 today, both gained over 4%. In terms of the broader market, they have outperformed the benchmark in today's trade, while Nifty Small Cap 250 has gained over 2% and it ends in green for the second consecutive day in a row. In terms of top gainers in Nifty Small Cap 250, we have stocks like Triveni Engineering and PCBL Chemical, where both have gained almost over 7% in today's trade. Now, in terms of Midcap 150, even that ends in green today, about 2%. And the top gainers include something like a Balkrishna Industries, which has gained over 7% in today's trade, Nifty Midcap 150. If we look at the sector-wise, we also see that all sectors end in green in today's trade, while Nifty Realty and Nifty PSU Bank are the best performing sectors, which both have gained over 2.5%. In terms of Nifty PSU Bank and Nifty Realty, they end in green for the second consecutive day in a row, and yesterday was the day one for them where they turned in green. Now, in terms of the top gainers, we see Phoenix Mills and Signature Global, both top gainers in Nifty Realty, both up about 4%, while Indian Bank and Union Bank are the top gainers in Nifty PSU Bank, both up about 3.5% in today's trade. If we look at the key trends that we saw in today's market, we saw the Nifty Metals, Nifty Financial Services, Nifty Auto, Nifty Bank, Nifty Pharma, Nifty FMCG and Nifty Media all end in green for the second consecutive day in a row in today's trade.
All right, thanks, Jasmeet, for all those details. Of course, it was a sea of green in the markets today after a long time. Now, nearly 10% of global crude supply is likely to get impacted in case of a prolonged Middle East war. That's the word really coming in from Sajid Chinoy, who's the Chief Asia Economics Research, JP Morgan. Let's listen into what else he had to say on the global crude shortage and therefore the impact.
This is yet another adverse supply shock that the global economy in India will confront. And as you alluded to, we're seeing too many of these in recent years. COVID was an adverse supply shock in 2020. You have the Russia-Ukraine war in 22, another one now. Because of the Strait of Hormuz being shut down, our latest estimate is about 16 million barrels a day are offline. Now, some of that will be compensated by running down of strategic petroleum reserves in different countries. Other routes have been found. But if this conflict prolongs, we're looking at about 10 million barrels a day permanently being taken out of the market. That's 10% of global supply. Asia is particularly vulnerable because a lot of crude and, more importantly, gas, petroleum products come from the Strait of Hormuz. So the concern in Asia is, for some countries, is there going to be a point, if this goes on for another 4 or 6 weeks, where actual energy volumes become a threat?
All right, let's also take a look at the currency market today, and it was yet another day of losses for the rupee as it closed at 93 rupees 98 paise against the dollar, logging a fresh record low against the greenback. Earlier, it, remember, had opened 5 paise weaker and extended the losses to depreciate as much as 7 paise to 93.95. So these are worrying levels at kissing distance to 94. Let's also take a look at crude oil prices, and they have fallen, and that's what has also impacted positively our equity markets. So with Brent really trading in the range of $98 to $101 per barrel, and while WTI is holding in the mid to high $87 to $90 band, and the prices are now driven by Iran's signals towards safe passage for non-hostile ships through Strait of Hormuz, a key artery for global oil supplies. All right, the Finance Bill 2026 brings a set of significant changes to the tax framework, with the government aiming to streamline procedures, reducing the disputes and make enforcement more efficient. For a detailed breakdown of what these changes mean on the ground, my colleague Shrimi joins us now. Shrimi, over to you.
Well, absolutely. Finance Bill 2026 has been passed in the Lok Sabha today with some key amendments on the direct taxation front. And to start with, the government has introduced 2 retrospective amendments to nullify some select cases, and one being that tax department actually empowered to reopen the cases which were earlier struck down on the ground of technicalities. And the second important aspect of that amendment is that past tax order which were earlier set aside by court can be revalidated. Now, these 2 important key takeaway is very, very important, because it could have ramification in terms of a lot of major cases, and we need to see how this will impact those cases which are now closed. And if tax department finds merit in those cases, they can go back beyond 3 years, which is given for the reassessment matter. Now, the tax assessees has been given 30 days to up to 3 months to respond on the reassessment matter. And in fact, all these issues and the actions are going to be administrative in nature, is what the new amendment talks about. Other than that, there are issues around the procedural defect in the notices. This amendment clearly talked about order won't invalidate proceeding. Any absence of DIN, which is the identification number to render tax orders, are invalid, is also being given, and any sort of procedural lapses in approval not to impact validity of the proceeding. In terms of compliance, which is also very important, and efforts being made to sort of reduce compliance for tax payers, one being that IT-80 orders to be uploaded on IT portal for the smooth implementation. No arrest can be made for non-payment of tax dues, and in fact recovery via attachment to continue. The move also on no interest on penalties for misreporting, if at all it happens in your tax filing from FY27 onwards. So in total, of course, there are a lot of efforts on tightening the tax net along with the enforcement action as well. And this bill now go to the Rajya Sabha for the passage and consideration.
Thanks, Shrimi, for that. But let's take it straight across to the cabinet briefing, where Ashwini Vaishnav is speaking at the moment.
क्या अचीवमेंट्स हुए, दूसरा बड़ा हुआ 28,840 करोड़ के सैंक्शन से मॉडिफाइड उड़ान स्कीम सैंक्शन हुई, और तीसरा बहुत बड़ा फैसला हुआ, भारत का जो एनवायरमेंटल गोल्स हैं और जो कमिटमेंट देश ने दिखाया है माननीय प्रधानमंत्री श्री नरेंद्र मोदी जी के नेतृत्व में, उसके लिए 2030 से 2035 के जो गोल्स हैं, उन गोल्स का अप्रूवल कैबिनेट में हुआ। सबसे पहले आप सब जानते हैं कि भारत में विजिटर्स अब बहुत आते हैं, चाहे टूरिज्म के पर्पज से हो, चाहे बिजनेस के पर्पज से हो। उन सब के फैसिलिटेशन के लिए एंटायर वीज़ा और इमिग्रेशन के प्रोसेस को एक तरीके से फुल्ली डिजिटलाइज करने का मिशन कुछ वर्षों पहले हाथ में लिया गया था। उसमें बहुत अच्छी प्रोग्रेस हुई, और अब करीब 32 सर्विसेज इसमें ऐड हो गई है, और 204 मिशंस हैं दुनिया भर में, देश के, इंडियन मिशंस, उन सबको इंटीग्रेट कर दिया गया है और देश में करीब 854 डिस्ट्रिक्ट्स हैं जिनको इंटीग्रेट कर दिया गया है इस पूरे प्रोग्राम में। इसके बेनिफिट्स जो हुए वो बेनिफिट्स आपको लेफ्ट में अगर देखो IVFRT से पहले और राइट में देखो IVFRT के बाद में, एक एक पॉइंट पे वीजा का टर्न अराउंड टाइम जो कई दिन लगते थे, 180 दिन, 30 दिन, वो अप्रोक्सीमेटली 48 आवर्स में कन्वर्ट हो गया और प्रायर रेफरेंस कैटेगरी एक है वो 21 डेज में कन्वर्ट हो गई। पैसेंजर क्लियरेंस टाइम 5 to 6 मिनट्स लगते थे, वो 2.5 to 3 मिनट्स में कन्वर्ट हो गया। बायोमेट्रिक उसमें इंक्लूड हुआ, जबकि आइडेंटिटी का कोई मैकेनिज्म नहीं था, अब बायोमेट्रिक्स बेस्ड ऑथेंटिकेशन स्टार्ट हो गया। पैसेंजर इंफॉर्मेशन मैनुअल होती थी, अब सॉफ्टवेयर एडेड पैसेंजर इंफॉर्मेशन आने लग गई। सिस्टम इंटीग्रेशन नहीं था, सारे सिस्टम जो भी थे सारे स्टैंड अलोन थे, वो अब सारा एक इंटीग्रेटेड एप्लीकेशन में कन्वर्ट हो गया। कहीं पर भी किसी को भी कोई डेटा चाहिए होता है कि कौन पर्टिकुलर व्यक्ति कहाँ पर है, कई बार लॉ एनफोर्समेंट की दृष्टि से जरूरत होती है, तो उस सब का भी एक रियल टाइम में डेटा अवेलेबिलिटी आने लग गया। अब उसको एक नेक्स्ट लेवल पे ले जाने के लिए आज कैबिनेट ने 1800 करोड़ रुपीस का IVFRT 3.0 अप्रूव किया होम मिनिस्ट्री के तहत। इसमें बहुत फोकस दिया जाएगा जो आज की टेक्नोलॉजीज हैं, AI बेस्ड टेक्नोलॉजीज हैं, और आधार का जिस तरह से बहुत तेजी से आधार यानी आइडेंटिफिकेशन बेस्ड टेक्नोलॉजीज के लिए जो बहुत ज़्यादा चीज़ें एडवांस हुई है, फेशियल रिकग्निशन, आइरिस रिकग्निशन की बहुत लो कॉस्ट की मशीनें आ गई हैं, उन सब का उपयोग इसमें किया जाएगा और पूरे के पूरे कोर इंफ्रास्ट्रक्चर को मॉडर्नाइज किया जाएगा। एक तरीके से लेगेसी इंफ्रा चला आ रहा था जिसमें सॉफ्टवेयर अपग्रेड करते थे, लेकिन ज़रूरत है कि उसको कंप्लीटली एकदम पूरी तरह से अपग्रेड करे, कोर इंफ्रा को ही उसका चेंज करे। कई सारे इसमें कंपोनेंट्स हैं जो आपके सामने इसमें रखे हैं डिटेल में। डेटा सेंटर नए बनेंगे, मोबाइल ऐप बेस्ड सर्विसेज आ जाएंगी, सेल्फ सर्विस कियोस्क जैसे हमने दुनिया के कई बड़े एयरपोर्ट्स में देखे होते हैं वो भी आएंगे, आइरिस स्कैनिंग, AI ML टूल्स, हर तरीके से एक पूरा यूनिफाइड पोर्टल, यूनिफाइड सर्विस, यूनिफाइड इंफ्रा और यूनिफाइड ऐप बनेगी इस नए इन्वेस्टमेंट से।
All right, so that was the cabinet briefing really taking place. Now, immigration, visa, foreigners register. All right, let's take it across to some of the rumors of fuel shortage really triggered panic buying in parts of Maharashtra, with reports that several reports and petrol pumps in Chandanpura district shut after running dry as motorists really rushed to stock up. Authorities have also said that this was driven by panic, not an actual supply shortage, and the government has ruled out any nationwide fuel crisis, stating that petrol and diesel supplies remain stable, refineries are operating at high capacity, and that LPG deliveries are also continuing normally with additional allocations made for critical sectors. Fresh assurances on also the fuel availability are coming in from both the government as well as the state-run oil companies. Indian Oil says that there is no shortage of petrol or diesel, stressing that all outlets are well stocked and fully operational, while warning that rumors and panic buying can really disrupt the normal supply patterns. In today's official briefing as well, Petroleum Ministry Joint Secretary Sujata Sharma urged citizens to remain calm and avoid unnecessary hoarding, reiterating that the situation remains normal on the ground. Listen in.
पिछले 2 दिनों से हमने देखा है कि कई सारे क्षेत्रों में रिटेल आउटलेट्स या पेट्रोल पंप के बाहर लाइन देखी गई है और पैनिक बाइंग भी ऑब्जर्व की गई है। मैं देशवासियों को विश्वास दिलाना चाहती हूं कि हमारे पास पेट्रोल और डीजल पर्याप्त मात्रा में उपलब्ध है। कहीं पर भी किसी पेट्रोल पंप पर कोई कमी नहीं है। पेट्रोल पंप को सप्लाई करने वाले टर्मिनल्स पर भी पर्याप्त मात्रा में उपलब्ध है। इसलिए अफवाहों पर विश्वास न करें और पैनिक बाइंग से बचें। मैं ये भी बताना चाहती हूँ कि पेट्रोल और डीजल के प्राइस में कोई बढ़ोतरी नहीं की गई है। अतः मेरा आप सभी से आग्रह है, कृपया अफवाहों पर ध्यान न दें।
All right, so that was a cautionary statement really coming in from the government. India keeping a close watch on Gulf situation, and the government says that there is no fresh incident really reported in the last 24 hours. According to the Shipping Ministry Special Secretary report, Rajesh Kumar Sinha, around 20 Indian vessels and over 500 Indian seafarers are currently in the Gulf region. Let's listen in to what exactly the Shipping Ministry said.
पिछले 24 घंटे में किसी भी भारतीय जहाज या नाविक से संबंधित कोई इंसिडेंट रिपोर्टेड नहीं है। हमारे 20 भारतीय ध्वज के जहाज, उस पे 540 भारतीय नाविक पर्शियन गल्फ में हैं और सुरक्षित हैं और उनसे डीजी शिपिंग लगातार संपर्क बनाए हुए है।
Amid escalating tensions in West Asia, diplomatic efforts to really de-escalate the conflict appear to be hitting a roadblock. In fact, the United States has reportedly proposed a 15-point US ceasefire proposal to Iran, even as it ramps up military presence in the region. However, Iran has outright rejected the idea of negotiations, dismissing Washington's outreach and continuing its offensive, including attacks on key energy infrastructure, keeping global markets on the edge. With oil flows through the Strait of Hormuz at risk, remember the situation remains highly volatile, with both diplomacy and military posturing really unfolding simultaneously. But even as Iran really rejects the talks, here's what US President Donald Trump had to say on why he believes negotiations are still on the table.
It was a very big present worth a tremendous amount of money. And I'm not going to tell you what that present is, but it was a very significant prize. And they gave it to us, and they said they were going to give it. So that meant one thing to me: we're dealing with the right people.
Is that nuclear related?
No, it wasn't nuclear related. It was oil and gas related. And it was a very nice thing they did. But what it showed me is that we're dealing with the right people. Because, you know, you don't know, because the leadership was killed, all gone. Khomeini, all gone. As the expression goes, the past supreme leader. And then the new supreme leader was racked up, at a minimum racked up pretty good, and everyone else was gone. And then many of the people in the third tier are gone. But we're dealing with a group of people that I think turn out, and the present, the gift they made to us was very significant, and they said they were going to do it, and it happened.
Now, also, let's take a closer look at what's really unfolding in the Middle East as the war really enters day 26. Now, Israel has launched wide-scale strikes targeting the Iranian infrastructure, while Iran has retaliated with missile attacks towards Tel Aviv and also central Israel, keeping the region on the edge. Now, the spillover is widening, with drones intercepted in Saudi Arabia, sirens in Bahrain, and even an attack hitting infrastructure in Kuwait, highlighting growing risks to the Gulf region and global energy routes. Adding to the concerns, Iran has issued a fresh warning, signaling that there will be no return to normalcy anytime soon and ruling out any possibility of compromise. So even as tensions really escalate and rhetoric really hardens, the big question remains, are negotiations still on the table, and who's really in control of the next move? So that's the latest really coming in from this particular war. All right, let's take you through back home, some of the big developments that's really starting, and shift focus on big money moves in the game of IPL. Now, just ahead of the new season, which I'm very excited about, and I'm sure you are too, well, a big development has taken place in the game of IPL. Well, both Royal Challengers Bangalore and Rajasthan Royals have been sold to new owners. RCB has been bought by a Birla-led consortium for about $1.78 billion, while Rajasthan Royals changed hands for roughly $1.63 billion. And together, these deals signal IPL teams are now billion-dollar global assets. On the same, we also caught up with Harish Bijur, who's a brand guru, and he is speaking about how these two deals have elevated the value of the entire IPL asset class.
When I look at these two teams, they are teams which have bitten into a particular valuation. Because till now, valuation was something which we would do at the back end. I personally am involved with a fair number of valuations on IPL teams for a long period of time. And what we do is we work it out together, put it out there, try to get that value. If you don't get it, you back out. But this is the first time that two teams have tasted blood. And this blood is big blood. And these numbers we're talking about is good. But then, these numbers will want to redefine the entire valuation of every one of the other 8 teams out there.
All right, and while we are talking about the business of IPL, let's also focus on how the next generation of large business families are really making IPL their new playground. And let me also get you the details on how I have really been compiling this particular aspect of that. Now, first on my radar is Mumbai Indians. The owner is Reliance Industries, pioneered the corporatization of IPL, remember, way back in 2008 with the acquisition of Mumbai Indians for a mere $111 million. Now, of course, Akash Ambani's role is day-to-day strategic operations and even auction masterminding. On the other hand, Lucknow Super Giants, a newer sell-off that really took place, a new team which got added, owner RP Sanjeev Goenka Group, and that secured the rights back in 2021, bought at that time at a whopping 7,000 odd crore rupees. Now, the next gen of the group, Shashwat Goenka, is the chairman and is taking all the strategic and also operational calls there. Now, let's talk about the team which has been sold, Royal Challengers Bangalore. The acquirer is a consortium that is led by Aditya Birla Group and sold at a whopping 16,660 crore rupees. And remember that Aryaman Birla will be the chairman once the deal is completed. And remember, this deal will be completed after the upcoming season. Also on our radar is Sunrisers Hyderabad, which is owned by Sun TV Network. And you all must have seen in the last season how Kavya Maran, who's the CEO of this particular franchise of IPL, Kalanidhi Maran's daughter, is the one also leading the charge when it comes to all the important decisions and day-to-day execution and leadership at this Hyderabad team. Now, Delhi Capitals, that is also owned by 50-50 JV between GMR Group and JSW Group. Parth Jindal is the chairman of Delhi Capitals and also the CEO of Bengaluru Football and of Indian Super Leagues. So he is well known in the sporting community, and that as a business. And Parth Jindal's role also has been highly vocal in really expanding Women's Premier League in cricket. Gujarat Titans is another one which was bought over by Torrent Group. A majority stake was bought and Jinal Mehta is the chairman and MD there. And Shan Mehta of the family also has a role of a director in Gujarat Titans. And last but not the least, and not necessarily business, but definitely big money, we are talking about Kolkata Knight Riders owner Shah Rukh Khan's Red Chillies has the majority stake, and his children, Aryan Khan as well as Suhana Khan, they along with Janvi Mehta are active on the executive board there. And also you would have seen Aryan Khan and Suhana Khan playing a role in the bidding process, also seen often on the KKR bidding table. So that's the high and mighty really coming in at this particular moment. These are the biggies and the new next gen of business houses really making IPL their playground. All right, with that, we have come to the end of this edition of Profit 360, but keep it with NDTV Profit. Thank you so much.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and one of the most loved shows on TV is the KYC show, and we get you interesting companies which you must be wondering which are those. But I'm going to give you some hints. I'm not going to disclose the company. The first hint for the company today in KYC is it's an interestingly Delhi-based NBFC company. Largely we see they are from Mumbai or Rajasthan, but a Delhi-based, NCR-based NBFC company. The second hint I would like to give you, a company is backed by ace investor Sunil Singhania's promoted entity. That entity is called Abacus. The third that's in focus is this recently listed Ek Mahina Hua hai Sirf. It's February 16, 2026. The recent listing is there, but market conditions also. Q3 earnings were good, but it's still down 20% from its IPO price as well. So these are the key hints about it. I know it's a bit generic, it'll take some time for you, and smaller hint I'd like to give you is just a 3-letter word, the first name. The company's name in focus in KYC is I finance. I in Hindi, I means interest also, and also in English, I means just I. But why are we calling this company? What are the reasons for it? First one, let's pull out what's the first question we'll be answering, and of course asking the management is what does this business do? What is the model and the expansion strategy, and why is it so asset heavy? It's a bit different from its other peers like SBFC Finance and 5-Star Business Finance. We'll try to understand that. The increasing inflation that's impacting their customers. Inke customers jo hain, you could say they are the MSME customers for their businesses. Agar महंगाई बढ़ेगी तो चोट लगेगी. MFI stress, that's what I'm talking about, and the asset quality deterioration. Third quarter it was there. This is the inherent business model also. I would just like to give you that. And will that continue in fourth quarter? Will the NNPAs go up more than 2%? Another question is, any green shoots is being observed in the industry right now? Right now this industry is out of favor. Is there any value coming back? And if yes, for an investor, this will be an interesting company. The usage of AI and ML in NBFCs, what has changed and how is company positioned? They call themselves a phygital company, but they have a massive branch as well. So that is where maybe a moat lies compared to its peers. The Q3 AUM disbursement did slow down, and will that persist going ahead? And if that happens, AUM bhi thoda gir sakta hai. So a lot of questions are there for iFinance, and to give us more details about it and clarify all our doubts in KYC, we'll be joined in on the show by Sanjay Sharma. He's the MD of iFinance. But let's give you more flavor. What does the company do? Let's go into the layers of these companies. It's very interesting, recently listed company. Key details about it. It was incorporated in 1993. It's almost a 30-year plus company. An NBFC offering secured and unsecured small business loans. Personal nahi hai, dhande pe loans aata hai yahan pe. And they are offering working capital, mortgage and Saral property loans. That's pretty much interesting. What does Saral mean? Saral means simple in Hindi. Secured and unsecured hypothecation loans are primarily to micro-scale MSMEs, and India is a land of MSMEs and the company is doing service in that. But remember, some risks are always associated with this type of business model. But look at the numbers, it's huge. Almost 5,90,000 active customers across 18 states and 3 union territories. Kafi phaila hua business hai. But importantly, this is very much important. Sunil Singhania, promoter of Abacus, has 1.1% stake in the company. That means Ace investor is bullish on this. Interesting. Also, the branch network is roughly 571 branches across these important states which I spoke earlier. And going ahead, let's look at the other key details about the company. How does the AUM goes? And AUM, it seems it's evenly distributed, and that's a very good point for a company like that. North, East, West, South, these are the total allocations coming in. This is AUM by zone, but let's talk about AUM by job, AUM by industry, and this is where how Bharat actually functions. There's trading, so much of that, 50% of that is in trading, some is in livestock, and of course the balance remaining is there in the services and the manufacturing services. So we have given you the AUM breakup कि धंधा होता कहाँ है और कैसे होता है और किसके साथ होता है. These are the 3 questions we answered, but management commentary is also very much important. ALM means asset liability mismatch. There isn't any there, and the cash flow in any tenure basket. So this is a positive commentary from the management. And the second one is the collection efficiencies that continues to improve. It's roughly 95% plus. But there's another angle to it, that's the AI ML usage, and this is very much interesting. Generally traditional NBFCs, we don't talk about it because at the end of the day, paisa aap kaise vasoolte ho, that is more important than even AI. But how does this help? How the co-origination of loans happens? All these queries we'll try to understand from the management. There's a diversified lender with a reduced cost of borrowing, and that has actually come down below the 9% mark as well. And company of recently got listed. They got a good borrowing profile. That is why the cost of borrowing comes down. But there are some triggers ahead, which is an issue. Asset quality that has been deteriorating. The MFI stress is there in the industry. That is why this sector is out of favor as of now. Their business with their peers is slightly capital intensive. You look at the branch numbers, when you compare them, then you realize कि महंगा तो पड़ता है शुरुआत में, but there's an other view to it as well, where alpha can happen. This is why people watch KYC, where I try to find out, is there any alpha left? The key managing personnel is continuously buying in the open market, should understand this. For high finance, that means a good momentum is happening. Of course, remember there's a lock-in period as well, so definitely other folks are buying in. There's strong yields compared to peers. इनका जो yield book है बाकी peers से ज़्यादा better है, and that is what is something which the street has not understood yet. Third one is the higher GNP ratios is there, but it's not unusual for a deeper informal MSME credit player. So their MSME credit profile is only like that. So it might be normalized to have a deteriorating asset quality ratio. But then what valuation does the market give that? That's something we will watch out for. So this is the entire picture for iFinance, but let's break it down. Let's give you the rating parameters, and I have tweaked them this time because remember the company is an NBFC. It's just been 1 month. The company has been listed. So I have taken asset quality. I have taken operational parameters. बैलेंस शीट कैश फ्लो इस धंधे में ज़्यादा नहीं देखा जाता, ये बहुत ज़्यादा इंपॉर्टेंट होता है, इस पे ध्यान दीजिए. रिटर्न रेशियोज ऑल्सो हैव टू इट. It's on return on assets, not on ROC numbers. We need to give it more time, and that is why we are taking a balanced approach for both shareholding and street credit. Peer analysis is very much interesting. I'm going to give you SBFC Finance and 5-star Business Finance, and we'll try to see the price to valuation, price to book valuations, who is cheaper and who is expensive, and lastly the outlook. कंपनी आगे क्या कहती है, इंडस्ट्री क्या कहता है, all of these details so that it's very simplified for you to analyze these companies. The first one is the income statement, or you could say the overall numbers, how things are panning out. We take generally for these companies the net interest income and PAT numbers. Largely they have been increasing after FY25 on these numbers. There was the listing also which happened. So post-listing, the Q3 numbers came out, and the Q3 numbers were also pretty much decent. The profit jump of 87% on a year-on-year basis, and also the revenue and the net income was also beating the street estimates. So overall income as of now is a strong thumbs up when it comes to iFinance. The second one is of course going to be your operational parameters, especially the asset quality. और ये धंधे में ही asset quality, if you see, that is where it's continuously increasing, and when these NNPAs increase, that is where the asset quality deteriorates. And in the current situation, महंगाई आई है, धंधे शायद कम हो सकते हैं, शायद ये सही समय पे लोन ना दे. This is the exact thing which you need to focus on. But interestingly, the credit costs are coming down, but that is nullifying. That's the business model we talk about. But asset quality, we need to see whether the pressure is bottoming out or not. As of now, it's a strong thumbs down when it comes to the operational ratios of asset quality. The third one is also operational parameters, but we are looking at some other movements. AUM and disbursements, that has done really well on a year-on-year basis, but on a sequential basis there is a minor jump coming in. The signs of plateauing is definitely there. So to even things out, I'm going to give this, you could say, a kind of a neutral rating when it comes to the operational parameters. But let's also talk about the fourth category, that is the return ratios. And yes, ROC, ROE is not there today. It's return on assets which we have taken, which the company has published, because overall history is on the lower side, but it's gaining. Q3 numbers, it was around 2.4%, but both year-on-year basis, 85 basis points, and both sequential basis, 40 basis points, there is a good jump coming in. Of course, there is some important development on the IPO front as well, but net the return ratios has been really strong. So I'm going to give this a thumbs up as well. Let's talk about the shareholding, and largely you'll be wondering promoter ka hai. So there is no definition of promoter here. Now what happens is FIs and DIs are there, and there is public. It's largely, we can see there's a lot of money from the institutions here, and it's professionally run company, and there's no proper definition of promoter coming in. At times this becomes a good point, at times a negative point also, but let's leave that to the street. And right now, as of now, let's give it more time before we judge the company on a larger time frame. So it's a neutral rating when it comes to the shareholding as well. Let's talk about street cred, how things have moved, and it's just been a month from the listing price. The stock is down 20%. Remember, the markets have also taken a beating, both mid caps and small caps. So it's just a reflection of the market. But the question is, was the IPO priced expensive, or is the company coming back to its normal fair value? These are the two questions, which all the investors talk about. But as of now, let's give it more time. It's a neutral rating when it comes to the street cred. But let's talk about the valuations. ये बहुत interesting analysis है, because you'll understand there are other companies also in this industry, but their business models are slightly different. There is a higher yield which is coming in for iFinance, and its better branch networks are there. NIMS is also something on the higher side, but 5-star is trailing at a 2.6 times price to book ratio and 1.8 times when it comes to SBFC Finance. But what I really like for iFinance is the valuations is at a very lower side. It's around 1.4 times its forward booking ratio. The price to book ratio is what we call, and this is pretty much interesting as well. So the valuations are attractive if you are tracking, and also operational parameters I spoke about. So it's a strong thumbs up when it comes to the price to book ratio. But let's talk about outlook. It's very much important to understand where does the company go in future. For companies focusing on increasing their average tenure of the loans. The more the average tenure of the loans, it helps the operational parameters. The NIMs are stable, that's what the company is claiming. And increasing in the mortgage loan in the product mix, that is where the company is focusing on. Also, the AUM disbursements growth, that seems to be plateauing, but that's the reason because it's the market conditions which are at play, and the credit cost, that is also normalizing as well. We checked the data over the last 3 to 4 quarters. Negligible active restructuring portfolio is there. That is something which augurs well for the future because the company is going at a stated core business. So outlook, I would like to give it a kind of a neutral rating because overall the industry is still not favoring the company, but company is definitely trying to stand out amongst its peers. So it's a neutral rating. But let's give you all the ratings, what we have done in the analysis for iFinance, and let's see what's there actually cooking. Asset quality is a big concern because of its higher exposure in the unsecured loan and situation which is happening, but income statement and return ratios has been really strong. Operational parameters, it's even Stevens, and let's give it more time when we judge this company on these two factors. But if you focus on peer analysis, that's the valuations, that's where the attraction is coming, and the outlook largely seems neutral. So the total rating for iFinance is going to be on the neutral rating side. It's going to be 5 out of it. This is the general number which we give. This is the biggest average in a KYC show for a company which we track, be it a small cap, mid cap, and at times even a large cap. So this is the entire final rating coming in, but joining us would be Sanjay Sharma. He's the founder and MD of iFinance, but you must check his history. It is strong. He has 4 decades of industry experience, and if you look at it, HSBC, ICICI, HDFC Bank, all the BFSI bigger names, he has held leadership positions. So ye ghat ka pani pee ke aaye hain. So these are the important life milestones coming in from Mr. Sanjay. But to give in more perspective, Sanjay ji is joining us. Good afternoon, Sanjay ji. It's always a pleasure to have you in here. This is the first time iFinance is also coming in, post its listing, post its earnings. Just want to understand how different is your business model compared to the other players in the NBFC space, because thoda sa capital intensive hai, aapke networks bhi bade hue hain, and plus you are doing the phygital ML AI concept also. So just give us the explanation of what iFinance is all about so that the market discovers what this company is.
Good morning, Sharad, and thank you for the introduction that you gave for iFinance. I think let me start by saying that iFinance focuses on providing business loans to the micro-scale MSMEs. And when you talked of कि बहुत MSMEs हैं, and there are almost close to 7 crore estimated MSMEs across India, and 95% of these MSMEs actually fall in the micro scale and especially in the unorganized sector. ये वो छोटे manufacturing units हैं या trading units हैं, service sector units हैं, जो which create most of the employment in the country. And iFinance was started by me as one of the founding members with the thought of solving this problem, because no NBFC or bank can give formal credit or has been able to give formal credit to this segment, because it's very difficult to underwrite a segment where there are no paper documents or no tax trails. So I think that's a thought that led us to starting this lending somewhere in 2014. And over the last 12 years, we have demonstrated not only that we can scale up, and we have almost close to 6 lakh businesses that we have lent to. We are spread across 18 states and 3 union territories. So clearly we have demonstrated that this business can be done, and it can be done to scale and with good parameters in terms of credit costs and profitability. So the segment is the future of Bharat, you could say. As India progresses and as the GDP grows, this is the segment that pushes the GDP up and makes sure the employment is there. So very important segment account to us to address, and it's a big segment.
Right. And Sanjay ji, the query is the ground situation, the ground channel checks which suggest, there is an inflation going on and there might be some impacts or the third order impacts or second order impacts to a lot of MSMEs also. Mangai hai, and of course asset quality does get, on the lower side, which already came in the third quarter. So can we expect that industry specific and company specific also, that MFI stress is there and it will take some more time for that to bottom out?
Yeah. See, I think the way to understand our numbers is that while we are in many of the tier 2, tier 3 towns, and we're not in rural areas, our lending is all for business or dhanda, as you said. It is not a consumption loan. So, where MFIs do a lot of consumption lending, we have targeted only specific businesses. So, our behavior of credit is often very different. And if you look at our credit cost, our credit cost over the last 1 year, every quarter it has come down. In fact, from it is today at 4.6%, and it is almost 155 basis points lower than what it was exactly a year back. So we have seen 4 consistent quarters of falling credit costs. So that concern that is the credit cost going to stabilize, we are not stabilized. We have seen a falling trend. There it is, 6.24 to 4.67 and consistently. So one thing is that we find that this segment is now already over that problem that was there in the market of overlending and is doing well. And I think that's why you will see that our quarterly profits have been better and better. Quarter 1 was better, quarter 2 was better than quarter 3, and quarter 3 has been significantly better than quarter 1 profits. Quarter 3 profit came in at about 43 crores. So one is that
Ji, yeah, correct. We got to understand about the numbers, but this is a bit different company. We just cannot, judge it like a normal NBFC company because the model is as such कि भाई इसमें NPAs तो महंगे रहेंगे. But on the other hand, your yields are very strong compared to your peers. Just could you explain us as an analyst, हमें क्या देखना चाहिए? What should we see? Yields or which are the operational parameters? Because I feel the traditional parameters may not work for this company.
Absolutely right, Sharad. That for us, a credit cost of 3.5% or 4% is okay. And in many of the lending companies which have larger tickets, typically 1 to 1.5% is considered to be okay. So first thing is that 3.5% credit cost is not a bad credit cost. We are already at 4.6 and it's reducing. Now, the reason it is okay is because we have a dominant play in this market. There's no one else who provides loans to these businesses. So the ability to price our product is very much in our favor. And that's the reason our NIMs have not fallen. They are still quite stable and they're quite robust. So while in many other peer companies that were mentioned, you will find NIMs are in the range of 11 and 12%. Our net interest margins are closer to 14.5%. I think that helps us absorb that 2.5% extra credit costs and still make profits. I think the way I would look at it is look at the volatility of the credit cost. If I am saying 3.5, how much do I move beyond 3.5 versus someone who says that their credit cost is 1.5, how much do they move? And I think you will find in that analysis, iFinance stands out as a company where the volatility of the credit cost is low. And in lending business, I think it's the volatility that matters. No one wants a very volatile play on credit costs. I think you'll find that iFinance gets a tick on that parameter if you analyze volatility.
Right, Sanjay ji. We had done a peer analysis and we had caught this trend as well. So this is how we have the discovery in our KYC show that track क्या करना है. यहाँ पे आप NIMs track करिए, yields track करिए, जहाँ पे volatility नहीं होता है, उन levels को track करिए. So that is why, we have picked up this important segment. But the mortgage part, that is where a little bit of bullish commentary is coming from the management. If you could just explain us, how this segment is growing and the growth plans ahead.
Yeah. So we realized that some of our customers, besides hypothetical loan, which is typically 1.5 to 2 lakh rupee loan, they also want slightly larger loans when they expand their businesses, go for new machinery, etc. And that got us into looking into mortgage-based lending. And today, our mortgage-based loans are roughly 22% of the total book. And they've been growing very handsomely over the last 1.5 years since we started. About a year back, the percentage would have been about 15-16%. Today, we're at 22% of our book. And overall, I think there's a growth of 23% that you've seen year on year in quarter three. Actually, quarter four is the best quarter in most businesses, lending businesses. So I think when you see the results of quarter four, that number will probably increase from the current 23% that we have talked of in quarter three to last quarter three. So I think when you look at this business, one is robust growth in AUM or the overall portfolio and the revenue, which in this market is unusual. Many companies are lowering down their growth, etc.
Sanjay ji, I just have a follow-on question on that because you mentioned that sequential basis there was still a jump, not a very big one on a year-on-year basis compared with, but AUM and disbursements did go up on the positive side. I just wanted to get your view on it. Right now, just fourth quarter and the first quarter, how do you see the AUM and the disbursement levels, going on, how the current numbers looking like for the Q4? You don't have to share the number, just share us the vibe. Kya vibe hai?
Yeah, see, I can tell you that while we in quarter three disburse typically 350 crores a month on an average, in January and February, which have already gone by, we have already seen numbers which are closer to 500 crores, 450 crores to 500 crores is the range in which January, February have played out. So you can see that from 350 to almost 450 is a sort of change. And March is always a very good month. So we are waiting for the March outcomes, which will be also probably better than the numbers that we had talked of January, February. So clearly, we always find that the fourth quarter brings in not just 25% of the disbursement, but closer to the 35-40% of disbursement, and which is being demonstrated in this year. Sure, just one point that if you allow me to mention is that this segment does not get impacted by things like change in oil price or a tariff, because it's a simple segment जो अपना basic necessities produce करता है, local market में बेच देता है. They are not linked to a supply chain. In our case also, this is true. Only our restaurant-related businesses, which is about 1.5% of our book, we will see an impact of the LPG shortage. But otherwise, this segment is fairly robust. वो भारत का business है, वो चलता है अपने आप, उसको कोई help नहीं करता, फिर भी वो ठीक ठाक चल ही लेता है.
Right, and that's the story. Bharat chalte hi rahega. Of course, little bit of segmental issues will definitely be there. But Sanjay ji, I need to understand the AI ML part. The company has been talking about a lot of loan origination and a lot of other activities in the digital segment. But ye dhanda mein collection bhi bahut important hota hai, and AI ML can just help you as a tool. I just want to understand, your company says you are phygital. How is this, and how are you getting this AI ML also here?
Sure, that's a great question. For a small ticket loan, अगर हम automate नहीं करें, so there's no way the business will generate profit. So automation is a necessity, and we have not only gone for automation, we have done a lot of work on machine learning or AI. Today it's called artificial intelligence. It used to be called machine learning earlier. So we've done a lot of work on that. Google Capital is one of the investors in the company, and I think with that parentage, we have done some good work. Collection is one area. We have used machine learning models in originating, in collection, etc. And since collection is what you mentioned, we have models which can predict the probability of a customer bouncing their EMIs and what is the chance that it'll be a bounce. That helps us in optimizing where to put our efforts, where to send a call, where to make voice bot based calls, and where to actually do field calling. We have voice bot deployment, which is what a lot of AI companies are today talking of. We've been doing that for the last almost 4 years. And the machine learning models that I'm talking of are almost 7 years old. So I think we've seen a lot of deployment of AI ML in our processes.
So we understand the entire picture now, and that's a very interesting way to look at things. And of course, there is a tradition and modern both is involved and you're working for Bharat, and that's a really, hats off to you, sir. And of course, you have seen the world, you have seen different places also, and hopefully we get in more products, especially for the under-reserved, and that's a good work you're doing in the MSCI space. Thanks a lot, sir, for giving the views about the company and the growth outlook for the industry going ahead and how different you are from your peers. And that is something which we have found out, and this is how we get discoveries for companies like this in KYC. Stay tuned to NDTV Profit for a lot of action regarding stocks and markets.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Hello and welcome to this breaking news. Cabinet approves the regional connectivity schemes modified Udan with a total outlay of 28,840 crore rupees. So the new development is that modified Udan with total outlay of 28,840 crore rupees has been rolled out and approved by the cabinet. Now posted on 25th of March 2026 by PIB, the Union Cabinet chaired by Prime Minister Narendra Modi has approved the launch and implementation of the Regional Connectivity Scheme Modified Udan for a period of 10 years, remember, starting from FY 26-27 to FY 35-36. So it's a period of 10 years with a total outlay of 28,840 crore rupees with the budgetary support, remember, of the Government of India. So let's also recount what is going to be the impact of this big development that has really taken place in the airport space in the country and for connectivity of the country by air. Now, enhanced regional air connectivity to really underserved as well as unserved areas, because remember, in our country, a lot of areas are unserved by and not connected by air, and this will give and create the platform and the airways and the airports for that connectivity as well. Boost to economic growth, trade and tourism in Tier 2 as well as Tier 3 cities will also be accentuated. So there are many, many aspects which are going to really get enhanced because of this key cabinet approval coming in for modified Udan with a total outlay of over 28,000 crore rupees. Neetu Shukla, who's the ex-in-flight director, aviation expert, now joins in. Neetu, always a pleasure to speak to you on NDTV Profit. Your first reactions on the modified Udan plan and also the plan that has been rolled out with the outlay. Is that sufficient?
Lovely being on the show as well. I think it's a very positive sign if we talk of development and if we talk of expanding our aviation footprint. So it is positive. What we need to look at though is that these are feasible routes and they don't shut down like the previous routes was the shutdown. There have been a few airports that were opened and have been shut down. So I hope we take everything into account before we roll out these airports and make them operational so that there is no loss to any of the parties involved.
That's right. But also a lot of infrastructure connectivity is also required. Neetu, as an aviation expert, how do you see the wide network of airport connectivity across the country really boosting the air connectivity, and also the infrastructure which connects the airports is one aspect, and the economics of those areas in Tier 2, Tier 3 cities to really make sense of a huge investment of airports in those areas?
Exactly like I mentioned, there have been airports that have been shut down. There have been no flights that have been operationalized out of those airports. A complete feasibility study needs to be done before we actually announce how many airports we're going to open, because in the past we've opened airports that have not worked. That said, it is really lovely if we can ensure connectivity. It would also help boost tourism and others related sectors in the country. And if the fares are rational, then I think even the common people would be able to use it. The recent policy of removing caps from airfares does not really bode well for such small airports, because then the flights become really expensive and we should have some rationalization. As I had also mentioned in my previous discussion with you, a lot of support from the government is required. So tax rationalization on airlines also is something that should be looked into.
Right, tax rationalization is another important aspect. But Neetu, if you really look at the aviation sector, currently they are really plagued by a lot of aspects which are really pressuring the overall sector in terms of their margins. So how do you think that in areas or in the routes which are going to have lesser traffic, that the government is going to really encourage these airline operators already working within margins to really operate? And what is the support given also or needed also for the airlines?
I think this industry should be treated like the other industries are. For example, if a corporate or an industry wants to be set up in a place where they want to improve the job data of that particular place, there are a lot of SOPs given to those industries. For example, land is given at a cheap rate, equipments are given a lot of benefits in terms of taxation and in terms of, the charges that are given for the import duties and things. So related kind of discount should be given to airlines as well. It should be looked at what is the requirement of the aviation sector, and those help should be extended. Otherwise, it will never be feasible and it will never work.
Right. So what have you heard from your airlines, sources in airlines and sources in aviation about the UDAN, and also about the investments to pour in for newer airports to be built, because government is going to play a supporting role, but ultimately the private sector investment in capex will have to be taking the heavy weight of that?
I think the timing, morbidly though, but it's actually the right time for something like that, because internationally travel with a global scenario is a little under stress. At this time, I think that if you think of expanding within the country, it could possibly be feasible, because they would need to divert their resources for restricted routes and flying routes which are available to them internationally. But on the other hand, considering the load of expenditure that has come on the airline because of the fuel prices and such, I don't know how far that will be practical. And this anyway is not a short-term planning. This would take a long-term planning.
That's right, Neetu. It's going to be requiring a sustained effort and a lot of effort, both from public as well as private partnership. So it has to be the government as well as the industry really rising up to the occasion. But let's take it across to my colleague Danish, who has been tracking the developments very, very closely and gets us the key highlights of the new modified scheme and what it really means for the sector. Danish, tell us.
The Union Cabinet has approved the modified UDAN scheme, and a bigger sum has been allocated of 28,840 crore rupees, and this is valid from FY27 till FY36. But one of the major, the decisions that the Cabinet has taken for modifying UDAN scheme is on the airports, as the government will be providing a support of 100 crore rupees per airport, and the mission is to develop 100 new airports under the UDAN scheme. Besides that, the government is not focusing only on aircraft per se, but the government is also focusing on helicopters, and for that the government under this scheme will be ensuring that 200 helipads are developed under the new modified UDAN scheme. And besides this, another major decision that the government has taken is on the viability gap funding, which is somewhere around 10,000 crore rupees, and this is valid for 10 years. And one of the reasons why this VGF has been introduced is the fact that in the past few years we have seen that airlines used to complain that they were unable to make any profits, especially on UDAN routes, and there were several UDAN routes that were shut over the past few years. But in order to ensure that more and more airlines participate under the UDAN scheme, that is why VGF will be provided by the government. And initially the idea is to taper it down for after a period of 5 years. And as far as the VGF support is concerned, the central government will be providing a VGF support of 80 to 90% to airlines. So this will ensure that big airlines like Air India, Indigo and SpiceJet and Akasa, they're also able to deploy their aircraft on certain UDAN routes. And besides this, another major, another big thing that has come out in the modified UDAN scheme is on the procurement of Made in India aircraft. And for this, the government has earmarked 400 crore rupees. And through this, Made in India helicopters like Dhruv helicopter of HAL and the HAL Dornier aircraft will be, the government will be paying to get these aircraft in the fleet. So it is a big development from the government side, as the new UDAN scheme will not only take care of airports or particular routes, but the government will also focus, basically the government is coming out with a 360-degree approach in which all elements of aviation are covered, right from airstrips, airports, new Made in India aircraft, as well as a viability gap funding. So we are hoping that in the new UDAN scheme, more and more airlines participate into this, and sources are also telling us that one of the reasons why such a big sum has been earmarked for UDAN is to ensure that more and more new smaller airlines, they also start in India, so that the regional connectivity can be provided to the deepest corners of the country.
All right, Danish, several takeaways coming in from there, and especially the one that modified Udan scheme has several of the earlier concerns being probably addressed. But Sanjay Lazar also joins in now. Sanjay, always a pleasure to speak to you here. You heard my colleague talk about the various changes which have been made in order to give a lot more comfort coming in for this Udan scheme to be now successful. Are you comforted enough for this really being viable?
Well, first of all, I heard Danish speak and he's absolutely bang on the money there. This modified Udan scheme is exactly what the industry needed for a fillip to tier 2, tier 3 cities, for Make in India aircraft, very important aspect, and 100 new airports. To give support to 100 new airports for the next 10 years. So that's about 12,159 crore outlay. Support for operations and management for 3 years. Heliports, which was, not spoken of so well earlier, and aerodromes, helipads. There's a lot of subsidies for airlines also, about 10,000 crores over the next 10 years. This will encourage new operators to come in for regional carriers and also encourage the bigger airlines like Air India and Indigo, like he said. Of course, Air India doesn't have any small aircraft to go into the Udan area, but I think this is the necessary push. Carriers would need to adopt tier 2, tier 3 city airports and even unconnected rural regions. I think this is a fantastic modification. Minister Vaishnav was speaking at the press conference. I was listening to him, and this bodes very well for the future for our aviation setup. I think we can only go from strength to strength here from here on.
Right, Sanjay, hold on to your thoughts, and also Neetu is also waiting by patiently, but I have one more expert joining in, Brigadier Vinod Datta, a defense expert. Vinod, welcome to NDTV Profit on this discussion. You heard my colleague talk about the modified Udan scheme and a lot of comfort given by VGF and other such aspects being really rectified in this particular new scheme. How do you read into its viability, and what are your key takeaways in terms of its practical approach and execution approach?
Well, it is going to be a very, very welcome, step as far as the government is concerned, primarily from three aspects. One is the connectivity. The tier 2 cities also will be, connected, and everybody can be, able to, or they'll be able to take on the air services. Second is that the pressure on the surface transport will be reduced. And because you see most of the highways, state highways or national highways or even cities are choked. Thirdly, from the defense point of view, it is going to add to a lot of air platforms from which the air delivery weapons can be launched. In case of emergency, these these heliports or helipads can be utilized because there is a directory of helipads which is available, but most of them are in a sad state of neglect. Secondly, the airports, if the number increases, we have seen that large number of exercises have been done on various national highways from where the the aircrafts were taking, because now we have seen that most of the countries are engaging in long range weapon delivery system. So the targets are now, they are back in rear areas, not at the border areas. So enemy would like to, damage, or they will like to outsmart the runways. So in those contingencies, even these helipads or heliports or such landing strips can be of immense use as far as the defense potential is concerned.
Right. Vinod Datta, hold on to your thoughts. Let me take it back to my colleague Danish. He has been tracking the development very, very closely and has an expertise on the sector. Danish, you mentioned a lot of takeaways. I want you to simplify on one particular aspect. How is this going to address or allay the fears of capital capex really coming in from the private sector for the government schemes?
Well, if we look at the 100 crore support that the government is giving for development of 100 new airports, from that angle, we can expect, big airport companies to develop more airports. And these 100 airports will not be identified as such, because India is a very old country, and and the government is saying that from the past several years, there are many unused airstrips. So the government's focus right now is to ensure that in order to promote the regional air connectivity, these airstrips should be identified in deep corners of the country so that they can be developed further. So once the government identifies these particular airstrips, then we can definitely expect that the private sector will also come forward to develop these airports, because if we look at an airport, and if we look at the return on investment, it is a lot of, like, these companies have to wait for a lot of time to get back the money that they've invested in. And with this 100 crore support per airport, this can motivate some more players to step into this field and to ensure and to develop more airports at different corners of the world. Because if an airport is developed at one particular corner, then we can expect a lot of ecosystem to develop around that particular airstrip. So that is one of the motivations of the government, to ensure that more and more airstrips are developed. This will also, in the longer run, if an airport is at any particular destination, till one point in time, if only trains were going over there and buses are going there, but now if a new airport is developed over there, this will lead to the birth of an entire ecosystem, which will not only lead to enhanced air connectivity, but it will also have a positive ripple effect as far as jobs is concerned. So that is one of the major things that the government is really trying to do with the modified Udan scheme.
Right, Danish. Also, the real estate development around the airports has been a big thing in the recent past, at least in the big cities. Sanjay Lazar, you made a comment that this modified version is a welcome step. Give us a little more sense on how will the private sector really view it, and are there any more aspects that the government will really need to address?
Well, first of all, of course, the airport sector is already open to private money. There is a lot of private money that has flowed in to the 3 or 4 airports that are under their control, the 3 or 4 big groups. So that's one big plus. Also, as you rightly said, around those airports, you do see a lot of real estate, SEZ, EEZs growing and developing into aero cities, so to speak, where you have, SEZ developing IT and retail and residential. What is important for the government to look at, and they've tried, I know, in the past, is capital flowing into airlines. That's something that we need to relax somehow and push, because our late adoption of the Cape Town Convention caused a lot of dismayed lessors during the Go First problem, and that somehow that sentiment has still not gone away, though India has gone out of its way now to correct that. So I think we need to bring in capital into newer airlines coming into the country. We need more airlines, of course, both big and small, and for that you need foreign capital to come in. I'd like to see some relaxation by the government there and some incentivization by the government for private carriers, for corporates to come into this sector. Maybe taxation also needs to be sorted out a little bit to make it more profitable for them.
So, Sanjay, you've hit the head of the nail, because, the aviation sector, the airlines as well as the airports are tied to the hip. And if there are no airlines or regional airlines who are ready to ply in the areas of tier 2, tier 3, where the traffics are low and the price will have to be affordable, then the airport mechanism also will not be successful. Neetu Shukla, you had some very important points to make in the beginning, but after listening to various aspects and also a breakdown of what has been really addressed by the government, do you also find that this one could be a lot more practical and successful now?
The devil lies in the details. So we'll have to wait and watch whether the entire thing is planned and how well it's executed. Because if we try and take the whole scheme at once and try to make it work, it will not. I think if it is done in a piecemeal manner, we can learn from every area which opens up and implement the findings in the newer areas. Like I said earlier, it will boost a lot of sectors like tourism and industries at large. But the whole thing would depend on how well the whole plan is executed. And we don't just need to give SOPs to people who are making the airports. The SOPs have to be extended to the airlines because they would be taking a massive risk, not only in terms of capital investment for the aircrafts, but also the support services and the staff to run the airline. So if there is enough SOPs given to the airline, if it is a collaboration with the aviation sector, I think it could see success in certain places, and we should be able to bite the bullet and say it's not working in certain places and move on. So the practicality is what will actually decide the success of this entire scheme. That said, remote parts of the country would be accessible to a lot of people who would not otherwise be able to travel by road, and it would give a boost to industries. So hoping for the best.
That's right. Let's hope for the best. Sanjay, we spoke at length about the aviation sector. This is not a great time for the sector given the kind of ATF prices and the pressure it's putting, and also the movement has been really restricted. How do you see the present concerns of the sector, and also how much of pressure will it really put back on the industry to really take strides into newer areas and expansions, you think?
Well, I was on your channel just less than a week ago when, to talk about the war and the impact of this Middle East war on the airlines. And I said the government must come out and, put its hand to help airlines, subsidize and cross-subsidize some sectors. And, lo and behold, we had the Udan scheme, modified Udan scheme that came out today. I think it's a step in the right direction. Airlines are suffering, yes, of course, but they've also been relieved of the airfare caps a couple of days ago. So airfares will probably go up because the ATF is likely to, shoot up by April once it's, the new prices are announced. Until this war is settled, we are going to see some tough times. We're going to see a drop in traffic. We're going to see a drop in aircraft utilization and capacity for the next 3 to 4 months. So it's a little bit of a tough time. I think airlines will have to tighten their belts. Consumers have to be ready to pay a little more. But if the government supports the industry and makes it easier, I think we will sail through. We essentially do need relief for these airlines, and the passengers as well, both sides. So I think this is one part that the government has done well. Let's see how we can control prices and reduce taxes on airlines, and rationalize them. We have a maze of taxes. Nobody is bothered to rectify it in the last 5 years, and I think it's high time. Airlines have cried a lot about it. I think the government should look at that as well.
Mr. Lazar, Danish Anand stepping in this side. So over the past few years, we have seen that there were many regional carriers that were supposed to start operations. There were a few players in the northeast, there were a few players in the south, but eventually nothing happened. So do you believe that under the new Udan scheme, we will see some new entrants in the field?
Thank you, Danish. That was what I addressed in my previous answer to say that, because of our delay in addressing the Cape Town Convention in India, lessors all over the world have jacked rates very high for India because of the Go First experience. And you're right, there have been carriers which have got NOCs, which were on the verge of starting up and cannot procure aircraft because the demands of lessors has become so high. So I think the government has to give some more comfort. I hope these airlines that are stuck at the moment, and I think the few airlines that we're both talking about, I hope that they get support from, airline leasing companies and get the aircraft in, because we need more carriers, whether they are, in the tier 1, 2 or 3 cities. We need more carriers to fly, and we need more investors to put in money into this sector for airlines, not only airports.
That's right, Sanjay, as we said, and that's been established very well, that the airport sector expansion cannot be successful if the airlines do not have comfort. And we also have a duopolistic environment in our aviation sector. And that has been a concern when Indigo's big crisis happened. And it was stated that we need more players to come in. But in this situation, of course, things are much more challenging. Final word to you, Neetu Shukla. Out of all of this, what do you make? Of course, devil will be in the details and we will get into the technicalities. But on the overall situation, how do you feel about the subject, the modified Udan scheme? And definitely, India needs much more connectivity as we develop further. And we need to work towards that from now.
So on the positives first, it's nice that the government is thinking of developing smaller airports in smaller towns. It will give a lot of access to those sectors. It will be very nice for industries to begin, for their trade, for their finances to improve, for industries to be set up in those places because we do have manpower. On the challenging side, we need to extend the same support to aviation sector that we give to industries and factories in general and to corporate houses. I hope that the scheme does not just invest money in the structure of the airport, because like we've seen in the past, 6 out of 7 Udan airports have been shut down in the north. I hope that doesn't repeat. And we need to do a complete feasibility study before we actually pour in the money. It has to be done in a structured and phased out manner.
That's right. Very well summarized there, Neetu Shukla. Thank you so much. And thank you for raising that point that this particular sector needs some concerted effort and a focused approach like has been given to many other sectors. If the PLI schemes have come in for various other sectors which the government is really focused on, then probably the airlines also need something like that. All right, let's also, before we wrap up this discussion, let's also hear our Minister Ashwini Vaishnav on this particular bit.
400 करोड़ रुपए का आपने मेड इन इंडिया एयरक्राफ्ट को लेके दिया, वो क्या थोड़ा सा एक्सप्लेन, कैसे इंसेंटिव देंगे, 400 करोड़ कैसे यूज होगा?
प्रोक्योरमेंट के लिए है वो, ध्रुव और डॉर्नियर हिंदुस्तान एरोनॉटिक्स लिमिटेड से HAL से प्रोक्योरमेंट के लिए.
All right, more airports required. Government and the cabinet really approves the new modified Udan scheme. And there are a lot of questions, but devil lies in the details. But definitely more airport expansion and connectivity, air connectivity is the need of the hour. Thank you so much for joining us on this developing news situation, and keep it with NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Trin Nguyen, senior economist covering emerging Asia at Natixis, joins in right now on the show. More importantly, Trin has a very strong view on India. She's visited India enough as well. And she's a great eye on what could happen to some of these economies as well. Trin, great having you. Thanks so much for joining in. Neeraj here. Good morning. Now,
good morning.
Trin, we know that a higher oil price as a result of this current conflict is a problem for a lot of oil importing economies, including India. The question is, how big a problem could it be, considering the levers that different economies may have and considering the levers that India may have?
Absolutely. You can see that the relief rally we have today in markets shows how painful it has been. So we're feeling quite relieved from the pain and hoping for somehow that this will end very soon, because the longer this drags on, the pain is going to be more acute. And here we're only focusing on the supply shock initially, but eventually we have to talk about what that means in terms of the current account and the shock to term of trades, what that means in terms of the demand destruction that needs to happen to balance the lack of demand coming from the Middle East for oil and gas, and more importantly, disruptions such as fertilizers, chemicals, important for the supply chain. So from an India perspective, I think first we have to make sure that we have supply for cooking gas, for example, LPG. We need to make sure, but the reality is not the most exposed, even if it is exposed. But supply shock is a challenge. And even if we were to secure supply, prices are going higher. You can see that even with a relief rally, Brent is very expensive. Jet fuel is very expensive. The good news is that it is not one that I think will feel the biggest of the brunt, right? So you can see that the INR has depreciated. So even the dollar weakened today is still only a -3% versus the worst would be the Thai baht and the Philippine peso. And the reason why is that the current account deficit for energy for India is not the most severe. And moreover, India has one key component that it can pull, which is its net food export. So when we think about beyond the supply shock of oil and gas, we have to think about what happens when fertilizer prices, no, not what happens, actually it is rising. It's just a question of how long it will rise. How that translates to food inflation. And even if food inflation were to rise, one lever that India can pull is to block the export of goods such as food, which it did in 2022, which then allows it to mitigate some of this inflationary pressure and the supply shock coming. Whereas a country like the Philippines that imports food will have to face a country such as India, as well as the likes of Thailand, being much more protectionist to really shelter its economies. Finally, I think the fiscal account is something to consider. India subsidizes fertilizer, and I think that's an area that's going to add some fiscal costs, but not as severe as a place like Indonesia that subsidizes diesel, and that means that the push on the fiscal deficit will be much wider than for Indonesia, for example. But on the other hand, it means that there's going to be rather a lot of inflationary pressures should this persist.
Okay, so Trin, you obviously talk to a lot of investors, global money managers as well, while you're doing what you're doing, right? There has been an incessant set of outflows into from countries like India, primarily earlier because of this AI trade, and now obviously because of this, in which case the FI ownership of a lot of markets like India would have come off quite a bit. This is not an economic question, but I'm still inclined to ask you, what happens to flows in the ensuing 9 months if indeed the conflict were to come to an end, say in the next couple of weeks?
Well, I think when investors look at India, they should think long term, right? So India had been very expensive because its return on capital has been excelling versus the others, has been outperforming economies like China, for example. But the reality here is the outflows actually make it much more compelling, and it forces actually the Modi government, given the crisis over tariff and also energy, to actually push through a lot of reforms. So I think the crisis is not being wasted here in India. Obviously, more reforms are needed, but reforms are being passed. One of the most obvious reforms is really the India having a much more risk appetite for policy regarding trade, liberalization of trade, and looking outward. So I do think longer term, it will benefit from this in that it will continue to diversify a supply of energy, right? When you think about the crisis, who is most vulnerable in Asia, India doesn't come out on top in terms of most vulnerable. It is very vulnerable, but it's not the most vulnerable. And that is because it's taking steps to really diversify supply of energy via renewable, via expansion into nuclear, and so on and so forth. And it also has coal, which can use, obviously, with a cost of higher pollution. But long story here is that those steps of whether it's diversifying energy resilience or diversifying trade or opening up its market, getting rid of a lot of this red tape is something that India will need to continue to do. And when it does that, it creates opportunities when the valuations becomes very compelling, and India itself, in this rise of geopolitical tension and conflicts, can stand out to benefit, given that it's much more neutral when you think about relative to, say, China as an investment thesis.
Okay, Trin, to take this conversation forward, this is Hiral here. Categorically, if you have to look at US and the Asian economies as well, there is this price channel which will differ between both of them, right? Now, you're talking about US, which is primarily impacted when it comes to gasoline prices. When it comes to Asia, you're talking about a direct supply threat. How do you think this will change the dynamics in terms of the reaction that the central banks will have to give in terms of the Asian economies, specifically if you have to look at India, as compared to the way the Fed would look at it?
Absolutely. I think the US is a negative shock, but it's a much better shock than the rest because it's net energy exporter. The shock will come through the consumer side, where higher gasoline prices will eat into purchasing power, and also energy sensitive sectors. But generally, it's quite sheltered. So the question for the Fed is really whether or not it would even cut, and how much it's going to cut, instead of 3, 2, maybe just 1. And it's still looking at potentially a cut cycle for the U.S. because the shock on growth will allow it to probably respond to growth rather than inflationary shocks. And the dollar actually is quite resilient, will actually offset some of that. So in other words, I think the Fed is looking at this quite, much more better position than, say, in Asia, where you have the likes of, say, the Philippines, where the peso is depreciating, or India, where the rupee is depreciating, and the central bank has to make a consideration. Look, we have a situation where we have to shut some demand to meet with the shock supply. And in that scenario, it means growth is decelerating, right? And the conflict has only been day, 26 today? So we're looking at this potentially prolonging. At the same time, we have to worry about the fact that inflationary pressures on the rise, the rupee is depreciating, so we have to choose between intervention or hiking rates. And I think a lot of central banks are intervening to really stabilize the excessive depreciation. Now, I think that means that central banks in the region are not in a comfortable situation. They're looking at in which they may potentially have to hike in a downward demand cycle, right? Okay. And that means that stagflationary shocks. And then that's why the bond market is really not happy about what's happening, and not just equities.
Correct, Rin. The bond market is not happy. So are you saying that, the previous conversations I remember you've had with Neeraj and Tamanna, you had pointed out that the next move of the RBI might eventually be a hike despite a current wait and watch approach as well. What is that specific trigger? Will it be oil price level, currency volatility that will actually force their hands?
I think it would be inflation that will be forced their hands. Okay. And I think currency volatility precedes that, because you have the depreciated FX, you have oil prices going crazy, you have fertilizer going higher, and you're looking at very hot months coming ahead, not just in India, but across the region, which means demand is going to be quite high. So I think there is going to be quite a lot of inflationary shocks the longer this goes on. While this is maybe day 26 of the conflict, we're talking about months of disruption, right? So it's not just, even if the war were to end, we should still see oil prices quite elevated. And if you look at the lessons of 2022, then it means that inflationary pressures are going to be rising. One of the caveats, of course, we're coming from a very low inflationary environment across Asia. So we do have some room for this to rise. But that said, I think it's going to be quite a lot of pressure building up. The second thing is central banks across the region will look to see whether or not this will last longer. And if they made a policy mistake in 2022 is that they thought the supply shock would be short-lived and it actually became endogenous. And that the worry here, in my opinion, is that they can over-worry that they were too slow and may respond too fast. So I do think in the short term, there'll be some pauses to assess how long this will last, so they don't want to shut down an economy that's already being destroyed by the shock of supply. So I do think the RBI will hold in the short term, but the next move, definitely a hike. And that's what the market is pricing.
Interesting. That's a change in stance coming in with what's happening geopolitically. But thank you, Trin, so much for joining in. Always a pleasure to speak to you. And again, the policy that's slated in the first week of April is something that will be crucial to watch out for as well in terms of what the RBI does, taking the current geopolitical situation into consideration.
Very few better placed than Sajid Chinoy, who's the chief of the Asia Economic Research at JP Morgan, and Johnson right now to talk about his thoughts around this and more. Sajid, so good having you. Thank you so much for taking the time out and being with us.
It's always a pleasure to be here.
Thank you so much. The pleasure, I tell you, is entirely ours. And Sajid, there is, in an event like this, you can call it a black swan, but these days these black swans are happening too frequently as well. But in an event like this, there is an immediate impact, there is a slightly short-term impact there, and then there is a medium-term impact. What is the most important impact, according to you, of this conflict, and where is it that India needs to focus the most on as we speak?
I think that's exactly the right question. I think the first point to recognize is this is yet another adverse supply shock that the global economy in India will confront. And as you alluded to, we're seeing too many of these in recent years. COVID was an adverse supply shock in 2020. You have the Russia-Ukraine war in 22, another one now. There is, however, a very important distinction between what happened in 2022 and 2026. And I think identifying that distinction is the key to the policy response. Back in 22, you had a shock to energy prices after the war, right? But there was no threat to volume availability, right? So the adverse shock largely played out through a terms of trade channel, where energy prices went up, that hurt growth, that hurt activity, and there's a well-established playbook that central banks and policymakers use. If this is a transient, supply shock, you look through it. If it's a more permanent one, you respond to it. What's different this time, Neeraj, is that because of the Strait of Hormuz being shut down, our latest estimate is about 16 million barrels a day are offline. Now, some of that will be compensated by running down of strategic petroleum reserves in different countries. Other routes have been found. But if this conflict prolongs, we're looking at about 10 million barrels a day permanently being taken out of the market. That's 10% of global supply. Asia is particularly vulnerable because a lot of crude and, more importantly, gas, petroleum products come from the Strait of Hormuz. So the concern in Asia is, for some countries, is there going to be a point, if this goes on for another 4 or 6 weeks, where actual energy volumes become a threat? Why do I say that? Because then the supply shock is working not just through prices, it's actually working through a quantitative constraint. And that's what we saw in COVID, that the minute you have a quantitative constraint and industries or businesses begin to shut down, there are lots of non-linearities here. That once a business shuts down, it's very hard to reverse that. Once workers are let go, it's very hard to reverse that. That is, I think, the main lesson we learned from COVID, that the hysteresis of these volume constraints can last for many years. And I think that's what policymakers in Asia, policymakers in India need to guard against. So I think there are many levels at which you need to respond to this. I think there's an immediate level. What do we do in the next 3 to 4 weeks? There's a second level about how you enable the macro adjustment to the economy over the next 3 to 6 months. And then there's a third, more strategic level. What have we learned from all these crises? And do we have to undertake a strategic reset in how we think about protecting the economy going forward? But the immediate impact, I would argue, is to try and get as much, crude and products from anywhere in the world. Try and boost production at home as quickly and as efficiently as we can, and be very smart about, if there are supply constraints, how those resources are allocated so that it's least damaging. I think that's why this shock, and the longer it goes on, the more pernicious it gets. This shock is different from 22, and the policy response will have to be a little bit of what we did in COVID and a little bit of what we did back in 2022. And I think that's the key for me.
That's a fair assessment, Sajid. Very good morning, Alex here. I'm just wondering more about the longer term points that you were raising, and absolutely bang on with regard to the fact that supply chains do change and the way that supply chains are managed do change after events like we saw in COVID-19. But I'm just wondering what the alternative is. There is talk of self-sufficiency on energy, but that takes years and years and a lot of capital to build out. And you need to be able to strike oil, so to speak, right? Even if you go deep sea, you need to have the capability of pulling that out. Do we have that capability, one, or is it going to be more from the perspective of finding alternatives? For example, building out very quickly a piped gas system and shifting to methane and reducing dependency on LPG. Is that what is going to have to happen?
The short answer is going to be all of the above and then some. And I think back to the 2013 moment. Remember, India went through the taper tantrum, and we were hit by a lot of macroeconomic instability, and there was a bipartisan consensus reached in the country that we need to guard against these shocks. In those days, the shocks were largely about capital flows and a sudden stop of capital. So what did we do back then? We said, let's rethink macro stability. And that meant building a war chest of foreign currency reserves. But it went beyond that. It meant putting into place a inflation targeting framework, instituting a new fiscal anchor. So there was an institutionalization of protecting against macro stability. I think this moment is one where we have to rethink an approach like that for the broader economy and begin to prioritize risk management. I think, the old globalization that we've all been used to for the last 20 years and the world has been used to for the last 80 years is behind us. The sooner we accept that, the better. And I think we're in a world now where trade is increasingly weaponized, supply chains are increasingly fragile. So I think what is it we need to do? First, we need to systematically identify choke points in the economy. Where are we vulnerable? Today, it's an energy shock. Tomorrow is going to be critical minerals. So where are the choke points? And then systematically address that. Now, some of that's going to be involved in building buffers, just building more buffers. We've seen in Asia, for example, Taiwan, Korea, China, they've got 120 days or more of strategic petroleum reserves. So do we need more reserves of energy? Do we need more reserves of commodities that China has been building? I'm not saying we should go to the levels of China, but I think the mindset has to be the same where, do we build more reserves? A. B, do we start diversifying our imports so that you don't become too reliant on any one import partner? When it comes to price risk, should we be undertaking a more systematic program of hedging crude prices using financial instruments like some Latin American countries do? So this is going to be a mindset change to say, the focus the last 2 decades has been how do we maximize growth rate, which always needs to be the focus. Now we need to add a constraint to that. How do we maximize growth rates subject to reducing volatility in growth on a year-on-year basis? And the simple answer is, for that, you have to get into a risk management mindset and build buffers, diversify imports, and hedge as much as we can.
Sajid, that's an interesting take. Good morning, Hiral here. So my question coming to you is now, when you're looking at the war situation, Middle East becomes a vital trade corridor, right? How does this actually conflict or complicate India's aspirations when it comes to becoming a global manufacturing hub, number one, because that's what we were aiming for with the China Plus One strategy. And two, when you're talking about the private investment cycle as well, the heightened uncertainty will probably somewhere put a pause on that aspect. And private capex is something which has been a concern. Do you think the government will have to double down in terms of where the public infrastructure spending goes to counter the potential freeze that could come in terms of private capex?
And this is where adverse supply shocks tend to be very pernicious because they make policy trade-offs more acute. So what do I mean by that? I think, in response to Neeraj's first question, I spoke about the fact that in the immediate term, you just have to try and augment supplies and ration demand efficiency. We spoke about the very medium term of, preparing for the next crisis, but it's an intermediate step over there. And I think the intermediate step is how do you buffer the shock most efficiently? And I think there it is to recognize from a macroeconomic perspective, where are the strengths and where are some of the vulnerabilities? The good news is India comes into this shock, riding on a cyclical growth upturn. Growth had picked up very smartly the last few quarters in response to all of the efforts of 2025, direct tax cuts, indirect tax cuts, monetary easing, regulatory easing, and we saw very low inflation. Right? So we've come in with 2% core inflation. So the good news is there are some buffers to absorb a little bit of a growth hit and some pickup in inflation. For me, the key area to watch in the next few weeks and months is going to be external imbalances, because we were in a situation where the current account is benign. It's running less than 1% of GDP. But the balance of payments was under some pressure because for a variety of reasons, capital flows have slowed. Now, the concern is going to be that given the events in the Middle East, you're going to get a correlated shock on the current account, because the possibility is if crude prices remain high for long, even if they remain at $85 or $90 a barrel for the rest of this year, there is a concern about gas prices, both of which increases your import bill. The Middle East could take a long time to recover. A fraction of our exports, a substantial fraction of our exports go to the Middle East, so exports could get impacted and remittances could get hit. So you're looking at a correlated shock of the current account, which could, easily double from 1% to 2%. And the question is then, how do we attract the capital flows to make the balance of payments work? So I think the first kind of order of business is to just ensure that external imbalances remain sustainable. I've advocated that to do that, we should be using both internal and external automatic stabilizers, that over time, if crude prices remain elevated, retail prices will slowly have to go up, because only then will you get the behavioral response from households and businesses to become more efficient on energy, cut back on volumes, and that gives you some relief on the current account. And then, of course, I'm very glad to see that policymakers are doing this. You let the exchange rate become the external shock absorber. And the reason I'm saying this is, all of this does relate to your question that for private investment, you need demand visibility and you need animal spirits. And both of these will come down to how well India can buffer the shock over the next 3 months. So if we do this, hopefully we get through this, we can then go back to the broader issue of how do you restart private capex.
And Sajid, maybe just end the conversation with that. How do you restart the private capex? But the point being that because there are state elections, 5 state elections in the month of May, very likely the prices at the till are not going to go up because that would be political suicide, I presume. So let's see when it happens, but maybe end the conversation at that point. Is it possible to kickstart private capex with the government using some of its firepower to do that little bit of spend on the capex, or will a lot of resources now get used in firefighting to combat the impact of this conflict?
And that's a great question. And this goes back to the earlier question. So a lot of this is going to come down to how much of, so think of this is an adverse terms of trade shock. Simply put, India will be paying more widgets to import the same quantum of energy. And the question is, who bears that cost? Is it the public sector? Is it the private sector? And what does the burden sharing look like? And again, it's okay if this process of retail prices going up happens after a month, because oil marketing companies do have some buffers. Retail prices had not gone down when crude prices fell, so there is some buffer to get through the next 4 to 6 weeks. I'm thinking more from a 3-6 month perspective. If crude remains at $90 a barrel, some of that adjustment will have to go to the private sector. Now, why is that important? Precisely for the reasons you mentioned. That if the adjustment mechanism is more equitably shared between the public and private sector, that just opens up more fiscal resources to keep pushing on capex and provide the demand visibility over the next 12 months to try and get private capex started. So for both those reasons, A, to elicit the behavioral response that you need to see to smooth the current account, and B, to conserve fiscal resources to do the capex that will be very necessary this year. We have to be realistic. With such a big global shock, we've had tariffs last year, oil prices this year, the private sector can be expected to be reticent. And while they are reticent and risk averse, the public sector will have to do more, which is precisely why how this shock is shared between the public and private sector becomes crucial in the months going forward.
Well said. Sajid Chinoy, thanks so much as always for joining us. Always a pleasure speaking with you.
Great pleasure to be here. Thank you.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru?
Where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that.
Good evening, I'm Vikram Oza, and you're joining us here on The Big Question on NDTV Profit. Now, tonight we're asking and talking about cricket, and that is about our big question tonight. Yes, it's not in the way that cricket was once discussed. We are talking about balance sheets now. We're talking about corporates getting involved. It's not about cover drives. It's not about Yorkers. It's about valuations and investors and billion-dollar balance sheets. So that's the change that we are seeing. It's a big shift that we are talking about right now. So because IPL teams are no longer just cricket teams, they are billion-dollar assets. Now you're seeing with Royal Challengers, Bengaluru, and Rajasthan Royals as well. They are both teams being sold at record valuations, and they are being sold to new global investor consortiums. What we are seeing today is not just a sports story, it is a business story and perhaps even a media story. Yes, because Royal Challengers Bengaluru, for one, has been bought. It has been bought by a consortium that includes the Aditya Birla Group, the TOI Group, and yes, we're talking about global sports investor David Blitzer's Bolt Ventures and private equity giant Blackstone in this deal that is worth about $1.78 billion. So it is quite huge. Rajasthan Royals, on the other hand, has been acquired. It has been acquired by a US-based consortium led by tech entrepreneur Cal Somani. And he's backed by investors linked to the Walmart and Ford families. We're talking about global entities, corporate entities getting involved, and this deal is worth about $1.63 billion. So these are not traditional cricket owners that we are looking at. These are global investors. They're private equity money that we are talking about, media companies, large corporate groups, all of them coming together in being able to buy sport franchises, and almost in the way that they would acquire companies or even long-term assets. That's the key difference that we're talking about. So from a few $1 million back in the year 2008 to well over $1 billion today, the IPL franchises may well be one of the most successful sports investments if you look anywhere in the world. But that raises a larger question as well, because when private equity and global investors and large corporates start buying cricket teams the way they buy companies, then what exactly are they buying? Is it a sports team? Is it a brand? Is it a media property? Or is it a long-term financial asset? So around the world, whether it is football clubs in Europe, whether it's the NBA teams in the United States or franchise leagues across sports, team ownership that we're looking at has increasingly become an investment portfolio decision as much as a sporting passion as we see it. So is this now the IPL firmly in that kind of league is the kind of question that we are asking. And if it is, then what does that mean for players, for fans, for the future of cricket as a sport itself? You know, in most businesses, investors buy companies for cash flows, brand value, and future growth. The question today that we are posing is, are investors now buying cricket teams for exactly the same reasons? Which really brings us to tonight's big question. With IPL teams now turning into these billion-dollar assets, is cricket becoming less sport and more investment portfolio? So is IPL now an asset class, as it were? Let's take that debate to our panel of experts, and let me introduce you to them. Former Indian cricketer Atul Vasan is joining us, along with sports entrepreneur Karan Ambardar, Executive Vice President at Elara Capital, Karan Taurani is also with us, and we'll have content strategist and data analytics expert Kamar Gautam Lalotra joining us. Atul Vasan, first to you. When you see IPL teams being sold for more than $1.5 billion, do you feel we are still talking about cricket teams, or are we now talking about sports businesses first and then cricket?
Well, I'm actually glad that cricket has reached this level. And I think back to the time when the first franchises were, brought on board for IPL. 67 million was what was paid for Rajasthan Royals, and I think we thought that was overpriced because they were the cheapest team. And I thought, where are they going to make the money? And then over the years, the kind of investment, that the kind of bar was raised, and people were ready. This market, Indian market, was ready for sports being consumed by the masses, and people actually willing to pay money for it, and the advertisers came in. So I think the time is right now that you can easily say that you can actually make money from cricket if you invest in cricket in India. But these valuations, $1.7 billion, I know Kal Samani personally also, but you have to be esoteric, you have to be very, very, intrinsic kind of a lover of the game also, because nowhere in the world, even if you see premier football clubs in the world, you see NBA owners, you see American football, nobody ever makes money by buying teams. So you have to be, it's a pride and joy of the billionaires of owning a sports team when you're involved and you got skin in the game. So I think that is what it is. I think the people who got on board by spending money are not looking to make money in the short run. It is a valuation game only. And I think you have to be a sports lover. You have to be a part, and you have to feel that, okay, come, I've got this sports team, and this is my team. That is the kind of connect.
I find that very interesting that you're saying that they have skin in the game, but they're not in it to make real money, because you're saying, citing from the other sporting leagues as well, that they don't really make money, or perhaps it's a valuation game for the long term. Karan Ambardar, do you agree with that? From a sports business perspective, what are investors actually buying when they pay nearly $2 billion for a team? Is it the cricket performance? Is it media rights income, brand value, or there is that long-term franchise appreciation that they're banking on?
I think they're banking on everything. Once you make an investment, it's not just for fun, for passion. I do agree with Mr. Vasan when he says that, a team is bought when you have the love for sports. Absolutely. But $1 billion is spent to get some money back in the pocket and earn some money out of it. Could be through evaluation, could be through short-term profits. The important point to look at is the popularity of cricket has, the kind of media rights that it is looking at. It's very easy for teams to now break even or even make profit, actually. And with the kind of growth rate that we are seeing in terms of how quickly cricket is being adopted by other countries, it's just a matter of time that you will have more players and more skin in the game or more people around.
Karan, what's your sense on this? Because, yes, there is a slight disagreement over here that there is perhaps not enough money to make right up front, and perhaps this is a long-term valuation game. What do you say? These deals are being structured like corporate acquisitions. There is consortium investments, equity stakes as well. So should we now start looking at IPL teams like companies rather than sports teams if there isn't enough skin in the game, and we're talking about big bucks over here, then why are businesses looking at them so keenly and putting up so much money?
Karan
Taurani.
Oh, I'm so sorry. Apologies. Please.
Not at all. Not at all.
So hi, Vikram. Pleasure to be here. I think very clearly we have to look at business economics. So when IPL was bought, the teams which were sold at that point of time, 15, 17 years back, we didn't expect this kind of delta in valuations, right? So I'll firstly clarify some data points in terms of why the valuations have moved where they are, and basis the valuation, what is the ask rate in terms of growth rate. So very clearly, valuations have moved for this property largely because of media rights, right? So India as a market, we've seen a big surge in digital media rights because of penetration, consumption, IPL being available free, and so on and so forth. We have also seen adoption in terms of sponsorship and ticketing revenue. These businesses have improved in terms of margin, but media rights currently drives a large chunk of the revenue. I think going ahead, what we're going to see right now is the market is getting consolidated. So we may not see this kind of delta growth rate from media rights. To kind of monetize this high valuation, or to kind of scale up the IPL revenue further from a number of maybe 600 crores on a per team basis to maybe 1,000 crores, 1,500 crores in the next 3 to 5 years. The ask rate would be to really scale up the non-media rights business. So I think that segment is all about ticketing, sponsorship, endorsements, maybe merchandising. So if you look at the global teams like Manchester United, they've got a very different mix here. So their dependence on media rights is somewhere close to about 30% odd. They've got a higher exposure towards ticketing, endorsement, sponsorship. So if we were to scale up, that non-media right revenue has to scale up. That's the first thing. Second is the delta which could be created by cricket going global. So we are seeing so many new teams coming and playing cricket in Champions Trophy, T20 World Cup, even USA has joined. So I think if cricket indeed as a sport does become global, you will see a delta in media rights as well, because monetization of the media rights in India as a country, we don't see much of opportunity in terms of growth. Obviously, the owners who've got these teams 12, 15 years back, they've already made their money. But for the people who are buying these teams today, international monetization is of extreme importance, and non-media rights revenues are of extreme importance if they were to monetize and justify these kind of valuations.
So, Kanwar Lalhotra, when digital viewership is growing at such a rapid pace and digital rights are now outpricing TV rights, now the question is the real IPL story actually a digital media story, or are we looking at something else?
Yeah, good evening, Vikram. Thanks for having me on the show. As the former panelist, and of course, we have a diverse view on how the growth story has gone.
Yes.
But if you talk about specifics in terms of, I'll break down the chunk into the TV rights, which I think so has really manifolded into a tectonic pace. But talk about the current media cycle where 2022 to 27, we have had IPL media rights being sold for 48,000 crores. But the penetration of the TV rights could see a kind of a tumultuous period because the kind of auctioning which will happen with two powerhouses in terms of the TV rights coming in, there's going to be consolidation amongst the TV players. This brings up a tremendous scope to open up the, as I think so the former panelists were saying, the digital media rights, with live streaming, digital media rights and all. So I think so when a private equity group like Blackstone, along with a diversified conglomerate like Times of India and Aditya Birla Group has come, they're definitely seeing some very, very strong fundamentals which could really take shape. And to talk about just the mere valuations of IPL alone, it is a 80.5 billion asset valuation, and the standalone valuation which one sees from Economic Times and Business Standard is 3.9. So the fundamentals have been very, very strong. And I always believe that if you talk about a global league structure, you talk about the Premier European leagues, it's a kind of a spiraling effect. It all is very closely linked. You have more eyeballs, you have more sponsorship rights that will drive in more revenue streams, and then you have alternate revenue streams. So here, I think so I sense that there's a strong feeling that all these owners, specifically the consortiums which have bought RR and RCB, they are really playing big or being bullish into the digital media rights. And one more point which I'd like to elaborate is that if you talk about IPL as a league or any other market cricket league there be, the stint of the league is very, very short as compared to the European leagues which go for 6 months. So there comes in another opportunity that once the valuation of a firm goes up to multiple crores, you can really leverage on, merchandise rights, ticketing rights, which is again a very minuscule part of the centralized TV rights, which is being distributed by the BCCI to the franchisees. So I'll be very, very bullish on the period which is coming forward.
Well, Atul Vasan is also very bullish, and he's seen a massive shift when you look at the player auctions, Mr. Vasan, the franchise contracts, the massive valuations. Do you think players today, they're thinking more like franchise professionals rather than national representatives of cricket compared to what you've seen in your era?
Oh, yeah, definitely. I think it's shifting now. And the players who are in IPL have got their own brand values and all that. And I'm just thinking that I think that some of the players are still underpaid. According to these valuations, cricketers are underpaid now because they have to get the chunk of it. And you compare the valuations of football teams, the American football teams, the NBA teams, and the kind of proportional payments to the players. You can see a direct disconnect in that because Indian players are Indian IPL players are still underpaid, if I think. But I think the valuation is not only game. I think the kind of merchandise I was listening to the panelists. The kind of merchandise of Man United T-shirts and other paraphernalia sold in India is embarrassing for me. And I just asked somebody, and I actually am one of the people who say, why are you buying Manchester United? India is 114th place in the world, football, and still there is this kind of mania. So I think this beast, this IPL, this product, has got, it's disconnected. If you see the world cricket, the rights can fall if India-Pakistan match doesn't happen. But this is indemnified. This IPL has indemnified itself, and it doesn't matter whether if India is not playing Pakistan, because every day, one of my stars will be playing in the game. So I will be connected to this game every day because I don't care if I support Delhi today and Delhi is out of the tournament. I will still watch it because some of my favorite players are playing for the other franchises. So I think, but having said that, one point somebody made that, the kind of overbidding for rights was happening because there was so much competition and then people were willing to dump so much money in cricket, whether it was Jio, Sony, Star, they were fighting. But now the consolidation is happening. So the valuations of the media rights will have to be, sorted. And it was over the hype, and I think people will realize that eventually, if you buy these media rights so much, the chance of making money is less. And people who are actually money and people who are sponsoring, there are companies coming and going. There's always, every year, there's a new segment of business, whether there are builders or there are banks or there are auto companies. They keep on shifting. You can see the Indian sponsors are changing, and anybody who sponsored Indian cricket team has gone bankrupt. So I think the sponsors will also make sure that the eyeballs are in proportion to the money they put in.
So, Karan Ambardar, we are now seeing all the large corporate groups. Yes, of course, Atul Vasan is talking about the sponsorships as well. And those are changing. But now looking at the kind of investments being made over here, corporate groups, private equity, global investors like Blackstone, international investors, all of them coming into IPL ownership. So is this following the same model as the football clubs, the NBA, the NFL? Is that what is happening right now?
Yes, absolutely. I mean, currently, if you see, if you genuinely count how many nations are playing good quality cricket, there are only 10 probably. Cricket is a growing sport. Globally, it is growing very rapidly. It's just been including the Olympics. And that has a direct correlation with what is happening with IPL and the franchises that are being sold. Because India is the hub of cricket. And that's exactly what is going to happen over here, because we are generating a lot of money. We are the biggest consumers of cricket in the world, and we have we are one of the largest, biggest sponsors of cricket also, if I'm not wrong. But yes, so these big companies, India overall as a country is being looked into as an investment gold mine. A country can only grow, become a superpower in three phases: defense, financially, or in sports. The first two have been focused on. Now it's the third thing that's been focused on, which is why a Blackstone-like company or an Aditya Birla, they're all looking at getting into these franchisees. Even though they're valued at such a high rate, they still know that there's lots left in it to make money.
Right. Well, Karan Taurani, I was just looking at the possibilities of revenue generation. And the revenue multiples is one part of the story. But what about the scarcity of IPL teams as well? How much have we accounted for that in terms of the kind of valuations that we are arriving at? Media rights, of course, they've grown from about 8,000 crores in early years to now 48,000 crores. So how much of these billion-dollar valuations are actually driven purely by broadcasting revenues is one side of the story. But in general, if you look at how this business is modeling itself, is it about the growth in revenues, or is it about the scarcity that is going to be generated because IPL teams are not going to be too many?
It's absolutely, I think, Vikram, I was coming to that point as well. So two things that hold favorable for this business, and valuations will always appear expensive at any standpoint. One, of course, is look at this business from a 15-year horizon. You've seen a revenue CAGR of more than 14-15% in the last 15 years, despite the pandemic, macroeconomic situation, inflation, consumption, and so on and so forth. So none of the external concerns have actually weighed down in a negative impact for this business since a very long time. That's one very big positive for this business. Second, of course, is the scarcity premium, right? We've got close to 10 teams today. Potentially, we can have 12 or 14 teams also in the next 5 to 10 years. But there's always be a scarcity premium to this business. Lastly, I think this business should not be looked upon on EV sales benchmarking basis, because this business generates healthy EBITDA, very great amount of cash flow. I think the ROIC of the business is more than 40%. So this business should be looked upon more from a return perspective, profitability perspective, and the revenue scale perspective. So I think putting all these things, I think this valuation is about 100 times FY27 P, which is like a 1 year forward number. But if you were to see a delta in the next media auction rights in the next 2 years, and if you were to see a delta in terms of higher monetization internationally, because that audience is premium in nature, that audience can pay more, and also in terms of sponsorship, merchandising, everything put together, the revenues will scale up. And so the kind of return ratios the incumbents have generated in the last 15, 17 years, that may not be the case for the new owners today. But yes, it's a very good, solid business with scarcity premium, with growth rates, which are kind of immune to the macroeconomic uncertainty which is going on. So it's a good business, but I think return ratios in the next 4 to 5 years will be slightly muted. 5 years hence, if these monitorables turn around, then that could amplify.
And here we are talking about valuations really giving you the dividends in times in the future, and you're saying that is pretty much capped. But Kanwar Gautam Lalhotra, when we're talking about IPL, it generates massive digital engagement. There is the social media traffic. The streaming numbers are a story in themselves. So now the question is, are teams essentially content companies that happen to play cricket matches?
So I'll give a kind of a business sense. You know, in the world of investment banking, where I was before I reached out to digital media, you had two types of models typically working. One was the KPO model, where you outsource certain of your core assets to digital companies. Now there could be a very good possibility from a private equity standpoint of big consortiums like the Times of India Group coming, which already are into the print or digital business, to leverage into these multiple asset groups rather than only relying or banking upon the core revenue streams which come from the TV rights. So as you correctly pointed out, I think so we are only at the tip of the iceberg. There's a lot of fueling which can be done right till the very bottom. And there lies, I think so, the real value proposition of making so many, as the last panelist pointed out, that it is not purely on a brand valuation that the multiple has been guaranteed to go down to a couple of 16 to 80,000 crore dollars. This is what they are seeing as a long-term potential for 5 years, because I'll be very honest that private equity groups, when they invest into companies, the end goal also becomes to have a kind of getting the company or in a particular getting the franchisee to become or go into the IPO mode and make it listed. So I think so for that kind of a dream or visionary thought, they would have done their back-end calculations as to which are the different data points or the asset classes in which they can grow. And we shouldn't forget that, of course, this is coinciding with a very interesting period where cricket, of course, has become, as one of the panelists said, an Olympic sport. And the global outreach or the media penetration, which was confined generally to the Commonwealth realms or the subcontinent nations, is going to go worldwide. Today, we have a North American continent which is sending out US and Canada. So that is if a very smart digital analyst or digital media within a group can analyze, okay, these are some of the other markets which we can tap. It can possibly...
So the geography of cricket's popularity is clearly growing. There's no taking away from that. But Atul Vasan, since we are talking about, the possibility of IPOs happening for a Chennai Super Kings perhaps, and all of the others, the popular ones perhaps hitting the primary markets, do you think the business case for cricket can become so large that it may obliterate the game itself?
No, I don't think so, because as we grow, as cricket grows, there are various formats coming. There was only Test cricket earlier on. We only used to play in white jerseys and all. Now then the one-day cricket game, the pajama cricket game under lights. Then the T20 has taken over, and I think because of the diminished attention span of consumers, and also the growing need for live, reality content. And I think the cricket match is the best reality show, because you don't know what's going to happen. You can't script it, and that is why. But I think the sheer numbers in the target audience, if you just mentioned Chennai Super Kings, you see the numbers involved in that. And it's just not constrained to Chennai itself. There are fans of Chennai CSK all over India. So I think they are the markets. They will be always watching. So all the product companies who are investing money will always factor for those eyeballs. And I think, and that's why Dhoni is still playing. Why is Dhoni playing? Have you realized? It's not the cricket value he's giving. It's because Chennai Super Kings and Dhoni are one product. And if Dhoni you take out, if it's not playing on the field, even if it's not delivering, the product's market value diminishes. So I think that is where people are trying to encash and build these mega players along with the brand name like Virat and RCB. So they are the connection, Rohit Sharma and Mumbai Indians. So I think this is what all the franchise owners will look for, to create value in big names and then accentuate the valuation of their own franchise also.
Karan Taurari, do you think fans care who owns the team, or is this entire valuation story only relevant for investors and broadcasters? I ask you this because we are wondering which are the perfect candidates now for the IPO markets. Do you think you have a ready list for us that would make it? Is it popularity driven? What is going to drive this?
I think, as one of the panelists mentioned, player profiling is very important for getting the market cap or the valuation of the correct IPL team. Now, if you look at the IPL teams, I think there's a 25-30% gap on valuation between the teams. And the reason very clearly is player profiling, branding of the team, and so on and so forth. So I think very clearly you have got Mumbai Indians, and also performance matters, right? So even performance of the team does help in creating a positive brand value. So I think basis the track record, basis the player profiling, teams like Mumbai Indians, RCB, have got a very strong brand recall, even CSK for that matter. So I think definitely if they come for IPO, there will be a lot of investor interest. But yes, the ask rate on valuation is the question mark. And what is the kind of returns these companies can generate from a medium-term perspective will be the key monitorable here. But yes, the interest is going to be high. But as far as fans are concerned, I think they really don't care who owns the team. I think it's all about the player profiling and the fan following that they have.
So, Karan Ambardar, now that we're looking at IPL, are we looking at sports teams? Are we looking at entertainment content? Are we looking at franchises that are being created? What's your sense? How are we moving this piece?
We are giving a structure to sports in our country, let's be honest about it, to the economics of sports in the country. I'll be very blunt about that. We are discussing sports business right now, but just a small example I'll give and then come back to your question. there's so many podcasts, business, finance podcasts, where investment is discussed. Nobody says invest in sports. Everybody is saying the next field is green revolution, green energy, renewable energy, or whatever the other industry. Nobody mentions sports. This is where, the structure is being given to the economics of sports in the country via cricket, via IPL. And kudos to BCCI for that. Where we are heading, it's just the tip of the iceberg, as one of the panelists mentioned. Our growth will be directly proportional to the growth of cricket globally. And that is the reason all these international players are coming in to ensure that cricket now blows up internationally, where there are at least 50 odd countries playing this sport. Imagine there was a time when BCCI was the richest sporting body in the world, or top 3 sporting body in the world, when only 8 countries were playing. Imagine 50 odd countries are playing. The amount of difference that will make. Yes. But having said the catch to it, when the number of countries go up, the number of players go up, which means the number of leagues and the number of teams go up. So sponsorship then becomes a problem. That's when performance comes into play, and you have to always finish in the top 5 or the top 10 to ensure that you keep earning money every year with via your sponsors.
So it's a nice cycle, and it needs to kind of fire on all cylinders, as it were. The numbers really tell the story over here. Billion-dollar team valuations, the massive media rights, the huge digital audiences, and global investors now coming in. The IPL today, clearly much more than just a cricket league. It is a sports league, an entertainment business as well. And increasingly, it is a serious financial asset. But at the same time, none of the kind of sport rise that we are seeing exists without the cricket as a sport itself, the players, the competition, and indeed the fans. So perhaps the IPL today sits at that intersection where sport, entertainment, and business have all come together. My thanks to all our guests for joining us tonight with their insights. Atul Vasan, Karan Ambardar, Karan Taurani, Kanwar Gautam Lalhotra. Thank you very much. It is quite clear that cricket today is not just being played at the crease. Now we are seeing its value being generated off the field, and that's the real takeaway. Thank you for joining us on this edition of The Big Question. I'm Vikram Oza from me and the team. Good evening.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. There are a few schemes and fund houses that stand out because so many of you invest in them. And they stand out because they have a process that you can understand and that a lot of you resonate with and accept. One that stands out to quite a few of you, as I said, is Parag Parikh, and specifically its Flexi Cap fund. Over the years, they've been right more often than not. They've had their fair share of criticism for taking very aggressive cash calls. But in retrospect, again, more often than not, those cash calls have worked. How are they positioning right now amidst this geopolitical conflict that is ongoing in West Asia? And what is the strategy that they're employing? How do they see the rest of 2026 panning out? I'm joined by Ronak Onkar, who's fund manager and research head at Parag Parikh Mutual Fund, PPFAS Mutual Fund. Ronak, thanks so much for taking the time, and always a pleasure speaking with you. I'm just wondering, there are so many moving parts here. So let me start with a broad question. You did not foresee this conflict. Nobody did. But you were adequately positioned before the conflict started to potentially take advantage of certain valuation drawdowns that you might have seen. So how do you see things as they stand right now in the equity markets? If I were to broadly ask you a question, how do you view the markets as they stand right now?
So thank you for inviting me, Alex. You're absolutely correct. Nobody foresaw this events happening, which has transpired in the last month. But interestingly, you made a comment that the cash makes us sit in a very advantageous position. I would like to say that over the last couple of years, we have been noticing that valuations have been reaching a new high across multiple sectors. So we've not seen too many sectors where we could confidently go and allocate capital to. And that is the reason why the cash has been accumulating. That does not mean the cash does not make any return. It gives you the money market rate of return. At least you get paid to wait to some extent. But at the same time, it is better always to not chase very, very high valuations. And what has transpired over the last couple of years, I would say, is that some of that froth has gone away. But that does not mean things have become meaningfully attractive. So as we speak, we are still at about 20% cash in the Flexi Cap fund and about 13% cash in the tax saver fund. That is as of our current fact sheet. But we have been allocating. So if you look at percentage of cash holding, it might look very high. But actually, the absolute amounts have been getting deployed across the ideas we already like. Some new companies we bought in the last year, which otherwise were not part of the portfolio before. We've also bought a couple of mid and small cap stocks in the portfolio. So there is action at the edges. But to give a broad perspective, the valuations have still not meaningfully changed.
Yeah, that's an interesting. Okay, yeah. So as of yesterday, or rather earlier in the week, I should say, Ronak, and things are moving very dramatically. So let me not get into absolute specifics. But if we're talking about at the Nifty 50 level and a price to earnings multiple, we're talking about arguably close to 18%. But for the small cap space, even though it has come off from a 24 times multiple, it has come to just about 20 times or 21 times, right? So to your point that in certain pockets, the valuations are still not terribly attractive. What do you think will happen in your hypothesis in 2026, right? Because the argument has been made that earnings were on the up and up, but this conflict has come at the worst possible time because input costs will go up. And that might prove to be a challenge for earnings in FY27. Do you think that that will happen?
So I think the best part to do is not to project too much on the future earnings that are going to happen. What we saw that earnings which have been cyclical in some of the sectors, that cyclicality played out in the last year or so, which made the earnings growth look very, very nice. But on the other hand, steady state businesses have not dramatically grown. So that is one thing, that earnings growth anyway was not at the best possible rate for stable businesses which are more stable over a longer term. But cyclical commodities, heavy businesses saw a lot of that growth happening. So even in smaller and mid-cap companies, you would see a lot of these sectors, there is a lot of concentration of customers, a lot of concentration of work that they do. It's not very, very meaningfully diversified. And that saw a lot of spikes in terms of earnings growth in the last couple of years. But that aside, now where the conflict is happening, a lot of the supply chain disruptions are visible to some extent, at least on the feedstock side or at least on the fuel side, or we're even seeing the routes being remapped in many cases. Who knows what will happen as a second order effect to other sectors, but definitely there has been a push on inflation across the entire supply chain, may it be grains, may it be fertilizers, may it be crude, may it be your precious metals, may it be your copper, and there's been a lot of demand behind it. It's not necessary that the supply has only gone lower and the demand has increased. Both supply as well as the demand has been increasing gradually. So we are seeing a lot of that remapping happening over the last 5 to 6 years. And especially when you saw the AI boom coming in, some of the base commodities have also become more and more attractive in terms of the demand in the ecosystem. That entire value chain has suddenly erupted in terms of a new demand generation. So we are seeing all of these effects play out together, and there might be a chance that companies might have projected a slightly higher earnings growth. Maybe the inflation can affect some of that. We don't know the metrics though.
Okay. I must confess that, Ronak, ordinarily, if we were speaking in the market shows, then I would ask you more technical questions. But since this show is aimed at trying to get particularly your investors in the mutual fund space to understand trajectory, let me ask slightly broader questions, which is that in order for returns to be made, ultimately earnings has to happen. Companies need to earn more profits, and that eventually translates into how the market views them and valuations change, right? So from that perspective, generally the views, and I know that you said it may not make too much sense to project forward on earnings, but let me ask you what is being proposed right now, which is that we're seeing crude oil prices move up very dramatically. There is a possibility, because of the damage to infrastructure, that crude oil prices will remain higher for longer. That will eventually translate to higher costs here in India, purely because we're buying this expensive crude. That would push nominal GDP, which is real GDP plus inflation, higher than it has been in the very recent past, particularly in FY26. And in extension to that, Ronak, the proposal that is being made by people is that this higher nominal GDP would usually translate into higher revenue growth. Is it too simplistic to explain this way, and will this likely happen?
So again, growth can come either from inflation or can come from actual growth of business activity or volume growth as such. I think either growth is welcome as long as it is beneficial to the entire ecosystem. I would advise, I think from a general point of view, not to take such broad-based calls on a very short-term time frame. Because equity as an asset class needs at least a 5-year horizon for you to see across a cycle of earnings. So it's better for investors, if they are really thinking about allocating to equities and using this as a framework, I would express a sincere request to have at least 5+ years of a time frame for investment and not touch equities if their time frame is any lower than that. And that being said, there's a lot of potential that investors can eke out from their portfolio in terms of asset allocation at this point in time, because if their goals are aligned to the time frame of their investment vehicles, then actually it really helps investors in the longer run. So if you want to have a less than 5-year kind of allocation, then hybrid products are a lot better from a portfolio point of view than your equity. But equity as an asset class, if you're really wanting to allocate today, do have a 5+ year horizon. That has not changed even before, but I would recommend that investors reassess that time frame of holding.
That is a fair answer, but let me ask about the sentiment at least, right, Ronak? Because, and you will probably be able to back that up with certain data points that you're studying. If you look at the bottom that we saw in COVID-19 and the sharp crack that we saw, and you compare the current time-wise correction and the drawdowns that we've had in 2026, how do you liken the two? Are they very different, or are there signs that they are similar?
They are a bit dissimilar. If you see, the quantum of drop that happened during the COVID was a lot more than what we see today. Ours is in the last grinding 2 years, we would have seen a little bit of valuation correction, and much of it happening this year because of the war in West Asia. But if you see, this has been a more gradual decline. It's more of a time correction than an event-led correction. And that has not been as steep if you see from an overall equity returns point of view over the last 2 years, 3 years. So it is not exactly similar. The only similarity I would say is in the supply chain disruption side. So during the COVID time when supply chains got disrupted, people really found different ways to reignite their domestic supply chains. The globalization effect in some way was disrupted, and you saw many other pockets of manufacturing happen in Asia, scaled out of China +1. A lot of these narratives and actually consequent investments happened on the back of that. We have not seen any commentary yet from any businesses today. I think it's too soon to even talk about these things. But there are definitely longer term planning should change for many companies where supply chains were too dependent on one region. And that planning has to happen over a period of time. It remains to be seen. So even the investments announced during COVID times or post-COVID times for readjusting supply chain, that has yet to see the entire capacity utilization cycle play out. We have not seen that. We have seen a lot of supply chain changes happening, but also seen a lot of business activity improving. So that is like, there's some positive and some negative in every news item. We have to take everything on a time frame. But I think last 5 years have taught us that disruptions do cause temporary shifts in supply chains. And in the longer run, people do adjust and people do know how to price those supply chain changes also.
As things stand, you've said that on the margin you've been deploying and you've been adding, you've been looking at broader markets as well. And you have run in the Flexi Cap fund a relatively tight number of stocks, right, that you like. What will need to happen, Ronak, for you to start deploying in a more material way? And are you likely to, at some point when that happens, move closer to the single digit cash, or will that in a very rare instance happen?
So we don't hold a mental allocation of cash in our mind that we want to keep in the portfolio. What we look at is from the universe of companies we are tracking, from the companies we like, the sectors we like, which are the great ideas that we want to invest in at some point in time. And of course, it needs to have the same filters of quality that we want to own, because these are companies we will be owning for a long period of time. So once those filters are met, we are in a way ready to allocate at some point in time. Then the debate only happens is at what price you want to pay. And then you have to compare with the alternatives that you have in the portfolio. You have to compare with the cash yield you're getting, the risk-free return you're getting. And on top of that, what earnings yield that the company can show in terms of future growth is what we are really considering at. So when all things are at par, the only reason why we want to allocate is when the valuations are very, very attractive. And although we keep tracking a lot of sectors, a lot of companies, in fact, our research team is busy churning out ideas and pitching ideas to us. The main challenge only happens is how much you want to pay for a certain opportunity. And we constantly keep reevaluating that. And which is the reason why some of the ideas that came in the last year in the portfolio, we have been sitting on studying these companies for the longest period of time. But only when the prices were attractive, we really moved. So tomorrow morning, if we find there are like 2-3 really good companies available at very reasonable valuations, you might see the cash allocation actually go down quite dramatically. Sure. In fact, we did that in the COVID times. We were about 12% of cash in the portfolio just before the lockdown happened. Yeah. And within a month's time, the cash position went down to single digit, 1%, 2%. Because we had so many.
Which is my point, Ronak, which is that the last time we saw this was 6 years back. So that's what I was wondering. But your point is well made. I'm just wondering whether any of your theses have changed over the course of the last 1.5 years in particular, because I remember speaking to you a while back and you said that you really liked software as a service companies, post COVID-19, and it made complete sense to get into those companies. But now a lot of those models are getting challenged by the disruption in technology. So have you changed your opinion on any of the stocks that you've held over the last 5-6 years?
So we haven't had too many pure play SaaS companies in the portfolio. What we did was we built a basket of companies, at least in the global piece, where they represent different parts of the technology-enabled ecosystem. So on the digital advertising side, we had Alphabet and we had Meta. On the e-commerce side, we had Amazon. On the software product side, plus the cloud computing side, we had Microsoft. But as it turns out, in the last 5 years, all of these companies have become even larger. They have put up more capacity to produce in the cloud computing business. At the same time, their organic businesses have also done very well. So that was something which we could not anticipate fully. I think we held on, which is great, and we added when the opportunity presented to us. But the idea was that the businesses did deliver what they had promised to deliver and some more. So from pure play software as a service point of view, we were not fully deployed, but there is some portion of that business within these businesses which has not dramatically changed. So there are companies which are pure play, which have definitely seen a hit in terms of their revenue model changing. But if you see our portfolio, which is tech enabled, and in India, if you look at it, it's more IT services driven. That piece has not dramatically been affected so far. But we keep monitoring it. It's not necessary that it will not happen. But the time frames, I think, are debatable.
Okay. Let me close out by asking you about what your research and methodology is showcasing at the end of FY26 and the start of FY27. And of course, there are so many disruptions. So one would assume that you are putting caveats even as we speak and in your meetings as well. Are you more comfortable with valuations and possible trajectory of earnings? Is there a possibility that if we may not have hit the bottom of the earnings yield picture, that we may be close? Or are you more or less where you were at the start of FY26?
So valuations are again very subjective in terms of market conditions. What I would tell you is from the expectation side, it's going to be more about how capital is going to be allocated across the companies we track, the industries we track. And a lot of the changes will actually be evident in when the results are out for this year. A lot of these conference call transcripts, when we listen, we're actually going to pay attention to how allocation of capital happens at the industry level. Some of the things will not change. So a lot of the domestic demand drivers and all which were in place and the trajectory which was planned, I don't think that will change very materially. But on the other hand, if there are a global business, how you would think of your global supply chains, how would you make sure that your products reach your customers on time? If you're a physical goods seller, how the goods will reach? If you're a services player, how the demand will be met? And at the same time, how would you allocate the surplus capital that you have in the balance sheet? Some of those questions will be on top of our minds.
Ronak, as always, absolute pleasure speaking with you. Thank you so much for taking the time. And I realize that some of my questions might have been a little vague and nebulous, but you answered it really well. Thanks so much for taking the time.
Thank you for inviting me, Alex. I think a lot of the equity-related stuff has to be seen from a longer-term perspective. Yeah. I would urge that is the only perspective to highlight here.
Yeah, absolutely. That's what we speak about most of the time. Thanks so much for taking the time.
Thank you.
What gift would you like? If somebody were to ask me that question, I would say, if you were to give me wealth, that would be an amazing gift. And there's a way in which you can do that. You can send me mutual fund units. Wondering how to do that? Well, the person who is going to tell you is joining me now. Kshitij Mahajan, Managing Partner and Chief Executive Officer of Complete Circle Wealth Solutions. Kshitij, as always, thanks so much for taking the time. And if you'd like to gift me some mutual fund units, you're more than welcome. But first, let's discuss how this is possible.
Well, thank you, Alex. Thanks for having me here. And very, very welcome paper and new regulation by SEBI, wherein a third-party gifting of mutual fund unit is also allowed. We keep on talking about gifting as a culture in India. What better than gifting something which will not remain the same but keep on expanding in its value also. And you can do that in a legitimate way without getting into any hassle of some physical instruments. So mutual fund, as we see, we used to do mutual fund for as a minor kid for as a guardian we can do for minor kids. Earlier, transmission used to happen when somebody used to pass away, and his or her units used to transfer to the person who's in as per the nomination who's in charge. But now it has made much easy in the gifting part, where let's say if I want to gift to any of my family member, or I want to give to you or anybody known to me, I can do it easily, and that too without any paperwork. And this has been carved out in a way where the transaction is very smooth. It's all online. Yeah, there are different angles to the taxation part when we talk about. When it's in family, it's a different angle, but when you're gifting outside, it's a different angle. But yes, everything is digitally done, and there are only 3 platforms through which you can execute. That's CAMS, Carvi, and MF Central, through which you can execute. So it is done in a way which is unheard of, that you can do this digitally.
Okay, so but before we get into the consultation paper, Kshitij, and this is a very interesting paper, as you've very nicely explained. Let's talk about what is currently possible. And what is currently possible is that you can gift your family member mutual fund units, right? And what's the way in which you can do that?
Yeah, so currently you can do that. You can gift to anyone in the family. Let's say a grandparent can gift to their grandchildren. They can gift and they can do. They have to open a basically under guardian account, and they have to become the guardian, and they can invest on their behalf. And once they become a major, they need to have, they attain age of 18, they need to have their own KYC done. They need to have their own, obviously, PAN card and KYC done, and then the units get transferred to their name. That's how it used to be done as of now when it comes to gifting.
But what if you already are? So, for example, if my grandparent wants to give me now a mutual fund unit, I'm clearly above 18 years old. Well above that. So therefore, what are the rules governing that process right now?
Yes, so anybody who's already 18 year plus, in that case, within a family, you can gift. And obviously, the transaction happened, and the transaction happened in a way that there is no under guardian account. Let's say I can buy, your grandparent can buy units, and when I today say, okay, I want to transfer these units to Alex, or let's say person in question, they can transfer one through the proper formats, which is the physical formats of various AMCs or RTA, and that's how they can do. Online, some AMCs are doing online, not everyone is doing online. There was not a structured way through which this entire process was working. So they can do that for under guardian as well as for someone who's 18 year plus also.
Okay, so now let's get into the consultation paper, because and that came out not too long back, right? You were mentioning that there are a few ways in which this can be done, and it also includes wallets and gift cards as well. Gift cards also included, right? So what are the details that you've picked up?
So I'm not sure about gift card, Alex. Somewhere maybe I have missed that part, but all I can tell you is the simplest way. What they have said is, let's say if I have some units in my name, and today I decided I want to gift it to my sister's son. All I have to do is I have to open a folio, and I have to do this online transaction through that folio number. Let's say he's above 18, he has already a PAN card. He needs to or she needs to be a KYC compliant. So once you are KYC compliant, you open a folio. I transfer from my respective mutual fund house to the same mutual fund house. So inter-mutual fund schemes are still not allowed. Let's say I have a folio with HDFC, and from there I can transfer to the HDFC folio of his. My units gets transferred to his units. Transaction happened. So my units are, let's say, I bought on 1st of November 2020. So it qualifies for a long-term capital gain. So so he will also have the transaction date of 1st November 2020 only. Not that if he want to sell after 6 months, he'll have a short-term capital gain. Same thing applied to his units also. So tomorrow, I don't want him or her to sell it, but they want to decide to sell it. So long-term capital gain, the taxation part will go to the one who's getting the gift, not the one who's giving the gift.
Very interesting. So I'm reading off what my colleague has shared with me from the consultation paper as well. It proposes gifting of mutual fund investments using prepaid gift cards. Mutual fund industry body AMFI had proposed investment gift cards to SEBI. The gift cards can be bought via bank account or UPI. The aim is to bring first-time investors into the market. Gift cards are governed by the RBI prepaid instrument rules, and there will also be strict caps to prevent misuse. The annual investment via wallets will be capped at 50,000 rupees per fund, and the SEBI is obviously seeking public comment. So beyond what you've described, which is actually a very interesting process, Kshitij, this has also come through. But I want to talk about the usability of this, right? Because in a lot of situations, inheritance comes into play where a parent wants to transfer their wealth specifically through mutual funds. And now a lot of people do have mutual funds, and they want to do that while they're still alive. Because a lot of lawyers are also advising you that if you want to have a certain distribution, why wait to make a will and then do all of that? If you're intending to distribute that wealth, you might actually want to do it while you're still alive. So if that is the case, and you don't want to avoid the payment of certain taxation, then this would be a great way to do it, would it not?
100%, Alex. You see that there's a live example. I have an aunt. She is now 91, and she has a mutual fund portfolio which is close to about 90 lakh. Obviously, mark to market, whatever erosion has happened. But I'm saying, let's say we are 6 cousins. Now, all of us. So if the proceeds has to get distributed, she needs to sell those proceeds, and she wanted to do that. Let's say this should be of use to all you guys. So the best way is that if she gives everything to the next all 6 of us. So in that way, what happens is like it becomes easy. There's no taxation part which is coming at her part. We don't want to redeem now. We want to enjoy the benefit of long-term capital gain. Once you redeem in these markets, let's say you decide to redeem on Monday, and Tuesday and Wednesday we have seen what type of rally we are in. So the proceeds will come in 2 days time, and you will miss the entire 2 days of rally also. Second, there's a capital gain element also. So I think the best way, one, it has jot down a way for a long-term capital gain wealth for the one who's taking the gift also, because then you have the proceeds with you, and then you decide what you want to do with those proceeds. And second is that you're not missing on any days. Let's say if I decide that I want to give someone and I redeem something, I want to give a check. So depends on how many days I will take to give that. So I might miss on the good days. And we have seen that in a year, let's say if in a decade you miss on 20 good days, you end up missing 50% of the run in the capital gain.
And finally, are there any restrictions on the quantum of gift?
Not only on the gift card part, there's a restriction of 50,000, as you said, what I know. Otherwise, there's no restriction as we speak. There's no restriction because it will be an individual call how much they want to give. Yes, it's a very important thing which one can do. They have to form a trust also. So there is no capital gain element for that also. So if you, let's say, you want to form a trust and you want to shift everything to the trust, and then trust will take care of other things. So till the time the trust will not redeem, there's no tax on that part also. So there's no restriction as what I can make out from the paper.
So the most important update, of course, is that you don't need to be a family member to receive a gift from somebody. It can be a third party, and once this comes through, it could well be revolutionary. Kshitij, thanks so much for taking the time and for speaking to me on my show.
Thank you, Alex. Always a pleasure.
Well, there you go. If you've got questions about how this can be done, we've actually Kshitij has described this quite ably for you, so you can follow that up and try it out. And if you've got questions still, you can write to us and we'll take it up. But that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come. Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Government's all-party meeting on the Middle East war ends. Detailed discussion on security diplomatic aspect likely have been discussed. Reports suggest US has sent a 15-point ceasefire plan to end the Middle East war through intermediaries from Pakistan. Proposal broadly touches sanctions relief, civilian nuclear cooperation and rollback of Iran's nuclear program. Israel launches new wide-scale strikes on Iran targeting government infrastructure in the northwestern city of Qazvin. Meanwhile, Iran launches a new barrage of missiles towards Tel Aviv and central Israel, triggering air raid sirens in the region. Cabinet approves an enhanced Udan scheme with an outlay of over 28,000 crore rupees, helicopter and aircraft worth 400 crore rupees to be procured through HAL. Lok Sabha passes finance bill. In an important amendment, government introduces flat 12% surcharge on buyback gains for individuals. Experts say impact will be higher on small and mid-sized buybacks. Market ends higher with the Nifty closing above 23,300 levels and Sensex gaining more than 1,200 points. Mid and small cap indices outperform with gains of over 2%. All sectors close in the green. Rupee ends at a new record closing low of 93.98 versus US dollars as the Middle East war rattles the currency market. Oil falls over 5% after President Trump said Washington was negotiating with Tehran and said US is offering what he described as a very big present linked to oil and gas, but Iran denies direct talks. With the Birla Group-led takeover of Royal Challengers Bangalore, Ariman Birla is set to serve as the chairman of the franchise. Has IPL become a playground for India's Inc.'s next gen? A special report coming up on the show.